Hello and welcome back to the meeting. Thank you all for attending. Just putting up our disclaimer here. We're not advisors. We don't make recommendations. We give you the information. So let's get started here. Okay. I want to go through a few things for kind of admin notes. So I sent out in the preview email, and apologize, there was a typo in the reminder. I said today, and the date below was correct, but I didn't catch that, so I apologize if people tried to log in yesterday. So we published all of the PowerPoints in our shared drive here, so people were asking for those. So now they're all in there. So all this is accessible to you guys. Let me put this link in the chat. There we go. Okay, so I just put it in the chat, so in case you don't have that link. So it says all the, different trades that we've gone through. When Shawn goes through some stuff, we made some changes to the mover, non-mover. So I think we're gonna have to end up updating the parameters here, but we'll go through that later on. So the other things, we put out the recordings. You should have got an email. So on our YouTube, and if you just search Delphian Trading, it'll come up. So under the playlist, we have the webinars. So that's the one right there that we did last week. And now we've been populating the weekly meetings in here too, for the past couple of weeks.
Because it has moved up.
We don't want to hear Shawn. So, I'm gonna, when this meeting's over, I'll publish it in here too. So, and we're trying to do a little better job of documenting exactly what we talked about. So if you look at the notes there. So thanks, Shawn, for doing that legwork. All right. So we've also been getting a lot of good feedback from you guys. So we wanted to go through and give you guys an update on where we were as far as some of the ideas that we've gone through. So the first one, and this took us a while for Sudhir, is this horizontal testing. So I'm not sure if the state transition was having an issue earlier, so we let the programmers know. But the new button, which will still say bulk, but so what it does, if we're looking for state one and we want to do a test, so when we hit that bulk, it's still analyze if you just want to do them singularly. But if you hit that bulk, it's going to open up in a new page now. So it'll take that strategy. So it was long stock here, 10 and 10. So it took that as the first strategy. So now if you want to do multiple tests on the same, state one transitions, so what you'll do is go in and click, the strategy that you want to do, which is this one, we'll say long call. And then you can keep adding on. So you can do another long call and change to, like 50%. And then you can go and do bull call. And you can do, however many you want. So you can see them all down here. And if you're not sure exactly which one or what's what, you can click on them and it'll populate back up here. And just make sure you hit save and it'll update appropriately. So once you're done entering, the test that you want to do, you just hit that analysis button up in the top right. So what that's going to do is submit all of, these 4 symbols for, these 1, 2, 3, 4, 5 different trade strategies. Now, this one was, we were having issues with state transitions. The seasonal was working earlier. I already tested that. So they said they fixed the state transitions, so we're testing it live here. So once it comes through all the results, you'll get an alert here under bulk analysis, and you'll be able to scroll through all the different results on it. Hopefully that didn't freeze up my computer. You guys have questions on like how to do this execution?
Josh, is this in which folder, which areas will this be in? Will this also be in the calendar as well as the state transition, or what?
Yeah, so you'll be able to do this in, right now, state transitions, seasonal, and then candlesticks. But, just be a little wary. Candlesticks, there's so many occurrences for some of those that it'll probably freeze up your computer. Like I was doing one earlier, and there's 191 bullish engulfing for one symbol, then 90 for another, and there's a list of 30 with. So if you try and do that, it's just gonna lock you up.
Okay. We haven't done anything with the candlestick, so I'm not too familiar with.
So the state's still not working properly, so we'll do it on the seasonal here, just so you can see the results. Okay, so I just took the basic 4, kind of what we search for. I know you guys do 9 out of 10. I just do 8 because there's always an 8. So I'll just put in, one more for time's sake, and then so we have a long stock, long call. So I'll hit
All right,
now.
Josh, this is Sadir. How did you get to this bulk thing? I'm trying to follow along on my other screen, but I just joined. I apologize if you've covered it.
Yeah, no. So when you're on the whatever screen you're hitting, so from now on that bulk, when you click that bulk here, it's going to open up in a new page.
Ah, okay. So that's gonna. Oh, I see what it does. Okay.
Yeah. So now all your testing's done here. So when you hit this, we saw that green submitted, whatever 140 trades. So now it's running it in the background, and then when it's done, you're going to get that bulk alert here. And then it shouldn't take long. We should get that shortly. Lord.
Yeah, I tried the state transition screen yesterday.
Yeah.
Still wasn't working.
Yeah, it's not working right now. They know about it, so they're working on it.
Yeah.
Yeah, it'll be the same as this. So so if we cover the with seasonal, the state transitions should be fixed today at some point.
Okay. So you just click through the strategies you want analyzed and save each one. It appears down here on below the.
Yeah. Right here.
Okay.
And then hit analysis.
Yep. And then you'll get that green check mark. So here we go.
So what does the result look like?
Here it is.
He's gonna show us.
Good timing.
Yeah.
Right. So it gives you that original list, and you can select on each one. So up here on the drop down, it gives you which one you did here. So we did seasonal, long call, long stock, and then a couple days ago I did bull call, long call, and state transitions.
Mm-hmm.
So this stuff's going to save for like 5 days, and then it's going to wipe.
Mm-hmm.
But, if you want, you can always, we added this little Excel so you can, download the data here if you want.
Nice.
Yeah.
Good.
So, and that's for, everyone they have here. So whatever
Can you open one of the Excels?
Sure. You misspelled back test, but no problem.
Okay,
Yeah.
very
so
nice.
Yeah, so it's giving you the readout from below there. And, you can do the same, you can click here and get the trade results just like on the other screen. So, very similar. We wanted it all inclusive on this page, when you're doing multiple tests, because, you want to be able to compare things, long stock, long call, and you can sort, by win percentage, all that stuff. So, and, obviously, you can do as many as you want, download, create your own Excel spreadsheets, and, whatever you want.
Hey, Shawn,
Yeah,
if you wanted to look at what that trade actually looks like as far as the strike prices, can you see it?
Not on this screen. So we don't have those trade buttons on there, but on the previous screen, if you put that strategy back in that on the single screen, and you wanted, Netflix, you hit that trade button, it'll populate for the expiration strike for you.
Okay.
But you couldn't do that on the earnings calendar thing.
What? What's that?
You can't do that on the earnings calendar side.
No. Now, well, earnings calendar is a little different. But no, that's not, that button is not on the earnings calendar. We can go through that. I'll show you. So is there questions on this, obviously, other than state transitions not working, on how to execute this, or any questions about it?
I didn't see the output of that when you did the poll.
What's that?
I didn't see the output of the bulk test.
This is the output.
Oh, it is?
Yeah, it gives you all the profits. So like when you do that initial screen, all it is the strategy. So then when that alert came, it populated the tables of win percentages, all the results you want, and then you can click individually to see the trades below and their own graph and all that stuff.
So, Shawn, Josh, this is Winslow. So the days in the trade you put in position holding days. So if I wanted to do 15, I'd have to run it again under bulk, right?
Yeah, whatever parameters you put in here. So if you want holding days 15, then you would just change that and then hit bulk from there. So it takes whatever trade rules you have populated here and moves it forward. So,
And it's for today's date, I guess, right?
yeah, whatever. I mean, you can go back in time and test it too. But yeah, this is for today's.
Okay, and you just go and select an additional strategies. Go back a screen and that will just accumulate the different strategies that you can run for.
Yeah, so it takes whatever this initial strategy is.
Oh, okay. So that's how you do that. Okay.
It takes that one already, and then you can add in
Gotcha.
other ones. You can change it to whatever you want. And then when you hit save, you'll see it down here.
Great. Okay. Thank you. That's cool.
So, I think the key to this is, go in to your general settings,
Uh-huh.
and you have all of the option strategies that you use, have them pre-populated to what you like. So you can do that with everything.
Okay, okay. So
So
if you're
that,
also looking at long calls, also do the same thing. Long calls, long stock, things like that, set them all up. So you
Yeah.
don't really have to change them there. Okay, gotcha.
yeah, so all you have to do is click, long straddle, yep, and then you hit save. So,
Okay, cool. Okay,
so it's all pre-populated to what, what you like.
okay, gotcha.
And that's just under the option strategy opening. So you can populate those, however you want.
Okay.
So I think that's the key to doing this kind of quickly. Any other questions on that?
Looks good. I want to play around with it.
Yeah.
How do you get to that? By on the left-hand column?
What's that?
How do you get to that screen initially? Under options or the
Oh,
back
it's,
test?
it's stock seasonal or stock
Okay,
state.
got it, thanks.
We had a new one pop in. So if you guys can, if you see ways that we can improve it, because now, you have all these, they're just going to populate a big list of everything you did, either state transitions or seasonal. So if there's ways you guys think, we can improve navigation or things like that, let us know, obviously. So I just want to look at the results.
And as a side note too, real quick, everyone, the state transitions page will have, so we have a total here. The state transitions page should show you the total trades that are involved with that particular stock based on that particular strategy.
Yeah, I have one from before. Let me, populate it. So that total trades, this is state transitions when it was working. So it gives you the total trades there, like Shawn said.
Josh?
Yep.
On one of those screens with the list, I see only like 110 and the rest are 8 until you change something and then it's like all 10s. Does that depend on the strategy?
I think the initial seasonal page was just saying that it's happened 8 out of 10 times.
Yeah,
And
this is the occurrences.
see right there, 10, 9, 8. Then when you narrowed it somehow, they came out mostly all 8s. Well,
Or tens.
yeah, or 10. Yeah, I
I
guess.
saw something too where it was a lot of tens.
So
So,
is that, is that to do with, what is that to do with? I mean, when one screen shows all 8s and 110 and the other shows all 10s.
Well, real quick, Josh, that the 8 out of 10 is just showing you how many times in the past seasonality wise that trade has done that, has shown those parameters seasonality. So 8 out of the 10 past years, but when he runs the bulk analysis, it's running the trade on all 10 years,
Okay.
right? So it's going to give you a result for each year, no matter if it didn't qualify that year or not, because that year typically would be a loser if it didn't qualify, right? So you're going to get 10 out of 10 trades. So this is showing you 8 out of 10 that this has worked based on like Tesla here. But when you run the back test 8 out of 10, it's going to show you all 10 trades. And that's what that other report was showing you, because there was 10 trades for this Tesla, even though it worked 8 out of 10 times. Does that make sense?
Now, what happens if that trade is seasonal, like twice a year?
Well, twice a year would be, it's seasonal based on 9/22, right? So the next 20 days. So
Yeah.
it wouldn't happen twice a year unless you tested it on July 2nd. It happened that year as well, but you're going to get a different set of results.
Yeah. This is just for a point in time for the year.
Correct.
Okay.
Going back to what Gene said, I saw the same thing. I think it was on the results of the bulk test.
That's correct. Yeah, so you have 10 trades because it's doing it for the past 10 years. So you're going to get 10 trades. This is just showing you that Tesla has only showed this occurrence of a 4% or greater move in 20 days, 8 out of the past 10 years. So it showed you those results 8 out of 10 years for Tesla, but when you run the bulk analysis and do the back test, it's going to run the test like it happened for the past 10 years, right? Am I speaking right,
Are
Josh?
you talking about Netflix or Tesla? Where,
Tesla on this one, because Tesla was qualified 8 out of 10 years.
where's Tesla?
It's in the middle.
I see it. Okay.
Am I explaining that right, Josh? I'm not sure. So yeah, 8 out of 10 there.
Results.
Say that
Okay.
again?
There we go.
Page of results. And I think that'll is something made of.
Oh, sorry, Josh, I'm still writing on your screen.
No, it's all right. I'm trying
There
to
you
get,
go. Is that the 10 out of 10? Is that, oh, well, this is another screen. 10.
this is the total occurrences. So it's 10, right? Everyone, there was 10 occurrences for each test.
Okay, it doesn't mean that it was 10 out of, it was met the conditions 10 out of 10 times.
No, it's just,
Okay, gotcha.
it's the number of back tests ran.
Yeah, yeah, it's got a different heading. Okay, gotcha,
The number of trades, right?
gotcha.
Yeah, yeah.
And so then you went to, okay. And then your next step where we saw it go down to 8 was the bulk test thing, right?
What?
Click on one of them and then you do a bulk test. And then it goes down to,
This is the test results.
Just, yeah, and then, Gene, and then if you look under qualified, under the middle column, it's 8 out of 10 times it was probably successful that met your
oh, I
conditions.
see. I'm sorry. I didn't see that
Yeah.
category. Thanks.
I didn't see that either, yeah. So Tesla should be on here somewhere within that group.
I finally found it on mine. So-
Right.
Right there.
So there you go. So you can see the 8 qualified, and then you can see the 10 trades that it's produced. And if you
Okay.
scroll down below Josh a little bit, you can see the 10 trades right there. Or it says 9, but one must have got rejected, I guess.
Oh, okay.
1, 2,
Great.
3.
Thank
Or
you.
Yeah,
it showed 10. I don't know why. Maybe one got rejected.
yeah, I don't know.
Hey, Josh, does this still have the bulk testing for the earnings trades where they'll step through the number of days backwards?
The earnings is the same. We haven't updated it to this type of format yet. So the earnings, when you go through that, it's going to be the same that we taught, before. Where you're
That hasn't changed.
Hasn't changed.
Yeah, the bulk is still individual here.
Okay.
Oh,
So
there it is. Okay.
yeah, it'll be the same. It'll just submit
Yeah. Okay.
and then
Thank you.
yeah. So I think we're gonna transition. We want to work out all the kinks on this first. So the new bulk.
Very nice.
Pretty cool.
Okay. Any other questions on that?
Yes.
Okay. You do have a question or no, Gene?
No, I said yes. Thank you.
Okay.
I mean, yes, I get it now. All right.
Okay. So that one's pretty much done, that horizontal. Okay, the next one. So this was what Gail had asked for. So, my system's kind of acting up here. So what I do occasionally is if my Chrome isn't working, I'll go to like Internet Explorer and log in there. So sometimes it's Chrome and sometimes it's the system, but if it's locked up or whatever, then I just go to the internet and try and
Is that to get the Adobe working, the PDF working or something?
no,
What you said Gail asked. I don't know.
Yeah,
what you're talking about.
yeah. So I was sidebarring, like if your system locks up, just go to another browser and try and log in there, and that'll usually clear it up.
What's the ideal browser that developers use?
Chrome.
Chrome.
Yeah, but sometimes Chrome just acts weird. Yeah. So, all right. So for what Gail had asked about output, so we're doing it via Excel. The PDF isn't. That's kind of like a.
Oh no, Excel's even better.
Yeah.
I can modify that. I don't have to translate it into something, a PDF into an Excel.
Yeah,
So
that's
that's
what we
better.
figured, and the PDF like creation that's not built. So
Yeah, well, you just had a button for PDF and it locked up the screen. It wouldn't do anything. So,
yeah,
but now if it can go out to an Excel, I like that even better.
yes.
But
Now-
Josh, okay, I don't have Excel, so what would I do?
Buy Excel.
No.
It's got something like an Excel, doesn't it?
Yes, it has numbers, but I'm not sure it will.
Will it download it? Yeah, I don't know. if
You
it'll
you can
download it.
use Google Sheets online. It's free.
Yeah, Google Sheets will open it.
Yeah.
All right.
And also there is a, what is it called? Open Office or something like that.
Yeah.
It's like a shareware version of Excel, Word. It's called Open Office, I think it is. And then there's a third option. So you have Google Sheets, Open Office. You can go to office.com, which is the Microsoft site, and for free create a login and use Excel and Word online, the actual Excel and Word online, on the microsoftoffice.com site.
Okay. Well, Russell was helping me. Didn't we get one put into the spreadsheet, Russell? I mean,
Yeah, well, yeah, we put a stock list in for all the pre-runners.
okay, so I did find with his help, a way to import it into a spreadsheet. So but it's still a learning thing for me, but we'll work on it. Thanks.
Yeah, Jean, my sister is an exclusive Mac user, so I'll find, but she has some sort of version of Excel that she uses, and I don't think it was anything that she had to pay for or whatever. So I'll find out what it is that she uses and let you know.
Okay, I do know that Apple has started creating a way to transfer Excel into numbers, but I haven't found how to do it yet.
Yeah, I mean, I think the biggest thing is the formulas and the filters that you could do with Excel and how it gets translated over to Apple.
Well, but Gail, maybe your sister, if she's an exclusive user, maybe she knows how, if Numbers has integrated Excel into their thing where you can use it.
Yeah, I'll find out because I gave her some formulas that Excel uses in order to put in her spreadsheets, but it's an Excel, it's an Excel-like, or it's, the same sort of, practice, or it's the same sort of application anyway, as what Windows uses. So I'll find out for you.
That would be great. Thanks.
Okay, so back to, so when you run a back test and you have a run, so when you go into this run report, so little expand button will give you results by symbol, state, group, or grade. So you can look at them like that. So the symbol one here, and it's going to take a second to populate. So you get a little Excel button up here.
Awesome, thank you.
Yeah, so you can download those, create a stock list off of that, but it gives you all the results, if you want to
Okay, super, thank you.
sort them by win and all that stuff. So
Great.
yeah, so that's how you can download your run reports.
Okay, great.
Symbol. So
Great.
okay, so that one's closed. What's the other one we did? All the stock splits should be, those are corrected, those errors. So if you find any, please let me know. But yeah, that's a manual process at this point. So if you see them pop up, just let us know. I know Apple was one of them, and there's some others in there. So oh, the other one. So in the virtual portfolio. So so in the virtual portfolio, you can see this, we now have scrolling here. So it keeps the stock so you know what you're looking at as you scroll right to left. I know that it's been an issue for a while, but so we got that corrected, and now we're working on the vertical access to lock in the top. That's not in there yet, but right now we're halfway done on that one. So we got the right to left scroll, so you can see what symbol was before.
Oh, love it. Nice.
Yeah.
Nice.
All right. So that one's halfway done. And I think that was the big stuff that we got through recently. Okay. Going back to that earnings.
Hey, Josh. What about items? I know I kind of mentioned some of them in the email to you, like for Intradier itself.
What's that?
Some items for enhancements and corrections in Tradier.
I'll have to look at those offline. I'll look at the.
I wasn't sure if to include it in this list. You're creating a master list, or you already have a master list, and these are just the ones that people submitted from our group.
Well, that's what they submit from our group. I try and include things that people email me about for the most part, but not all of them. I try and put them all in there, but I don't always remember. So I'll have to go back and look at that one.
I think the biggest thing that I would like to see in Tradier is stop losses.
You mean in the on Tradier platform or in the live portfolio?
Yeah, the Tradier brokerage.
Oh, yeah, that we don't have much.
I have control on that.
Yeah, we don't really have control on that. That would be in a shook talking to their CEO, Dan, about that. And I don't, I'm sure there's like compliance, I don't know all that, why it wouldn't be in there. It's in Thinkorswim, right?
Well, it's in all of brokerage's account.
I don't know. Well, we can ask the question. Have it, Shook ask it.
I know that he did the correction as far as if you're just doing a long call or a single stock, you could go ahead and put a stop on it. For any option trades with 2 or 4 legs, you can't do it.
So Ross, are you using that platform now?
I am using the Tradier platform, yes.
Oh, okay. I didn't know it was available.
Yeah, it's you can get it's a partner of ours, so we're not so we work together. So what the offer is, like, if you're a Delphian member, you can get unlimited options-free trading from Tradier. It's like $50 a month. You can trade as much as you want.
And it's real time, right?
Oh yeah.
Okay.
Yeah, Shawn, I use it. I know there's quite a few customers that use it. Shook uses it. So I haven't had any problems execution-wise or anything, as far as Tradier. Have you, Shawn?
No, I haven't had any issues either. But yeah, some things like that, like Russ mentioned, I mean, you got some things that are missing that you don't have available in other applications. I think if we just get a shook in there, or email them, email trader if you have a contact and just say, hey, why don't we have access to this? And they might be able to jump on it, but we don't have much control of that. But yeah, I mean, fill wise, I've had some good fills there and some bad fills there, and I've had some good fills and bad fills on Thinkorswim too. So I think that's just kind of like routing, and just happens depending on the actual market you're trading, and not necessarily their push to the actual exchange, So yeah, it's been good.
Okay. So as far as like the earnings, so when you go through, and I shared that plan with you, so my system has all the alerts on it already created. So if there's ones that you want to add to your system, and we're working on like an add all, but if you wanted to add like the city, then there'd be a bell here for you to create an alert on your system for this trade, which would populate the 30 delta 60 days out. So that'll come in your daily alert tab here next to the studies. So like last week, I had bullish, bearish. Hopefully you guys did that bearish one. So it'll populate in there and give you, where you can add it to your portfolio, but it gives you the strikes and everything like that. So,
Josh,
Mhm.
are the alerts fixed to the correct day? Because I'd sent an email that they're.
Yeah, we're working on that logic. So right now it populates on, so this would be after the close when you're supposed to get in. So we're working on the logic for that, where it'll give you the notification, the day before.
One other thing, I have done every single earnings trade so far. Some on paper, others live. I did Fastenal live, Delta Airlines live, which were both winners. The bullish pre-runners, because I have a personal bearish bias right now, I'm doing on paper.
Okay.
I still trade them on the TOS paper simulated account, because my personal opinion is the market is going to go sideways or down until after the election. But I got to Goldman Sachs today, and the earnings were showing on October 20th.
Okay.
I checked online. They have moved it up a week
Really?
to October 13th. I checked on CNBC and TOS. So what that did was the trade today, which was supposed to be placed, which was a volatility rise, was a week too late.
Right.
It was supposed to be, I believe, 17 days prior to earnings. Well, since the earnings have moved up a week, so I had made a note. I have printed the schedule, and of course, there's, I think, 3 other Goldman Sachs trades in this earnings plan.
Okay.
All show the earnings on 10/20 and the related trade date. They all have to be moved up a week.
Right. Yeah, that's what we had talked about like a lot during the webinars. People have been modifying the earnings dates kind of on the fly, the past 2 quarters and this quarter obviously too. So always, check it, beforehand. And, if I would say if, it's supposed to be 17 days and now it's 15, then you just, you can track it. I wouldn't, don't trade it.
Yeah, well, I did the simulation, and it was supposed to be 17. Now it's 10, right? Because we're a week off.
Yeah.
And I reran the study, or whatever you call it, in the earnings calendar, and it came out to a 50% win rate instead of the usual 80 or 90. So I didn't take it at all.
Right.
But generally, what I'm finding is when I check the earnings usually move out. They move further out. So like Philip Morris, the bullish pre-runner, it was listed as earnings on October 15th, like you're showing on the screen.
Right.
Well, when I got to it, they had moved it to October 20th. Well, that moved the trade date 5 days to November 22nd. So when I was checking on the 17th, it's okay if the earning moves out, you know what I'm saying? Because you get there on the 17th, say, oh, I'll make a note to do this on the 22nd.
Right.
On the other hand, if the earnings move the other way, like Goldman Sachs, where they moved it up a week, well, you've kind of missed it, right?
Right. So this one, in our system is showing the 19th right now. And
I'm going by the original PDFs you sent out. I have
Yeah.
those printed out, yeah.
Yeah, so it was originally the 15th, and the system updates each night. So if whatever Zax tells us, that's what we put in there. So it's now showing the 19th, which is why you kind of want to consult this like each day. It'll give you the updated earnings dates, but
With that said, too, we were looking at Apple and Google. They had moved up too. Did that correct on this sheet, Apple?
What was it originally? I can look up prices.
It was 11.4 originally. It moved to 10.29, I think.
I don't think this is sorting properly. We need a search for symbol.
And Google moved up too, according to TOS.
There's Google's. Ours is showing 1026.
Yeah, then it did correct. It did, because I'm not sure what you had, but I know that Apple was 11.4 and it moved to 10.29, I think.
We need a search.
There it is. It's still showing 11.4, but TOS is showing 10.29.
What's that?
TOS is showing 10.29.
Okay. Yeah, so I mean, we don't control that earnings date data. That's just fed from Zax for us. So if when they update it, it'll be updated each night for us. That's the difficult part with this earnings is ensuring, the earnings dates for those symbols coming up. And, looking 20 days out, it could, it could be a problem, if they're moving. Yeah.
Josh, at the appropriate time, could you do a little conversation about market direction and, stay tuned, but at the appropriate time. I just wanted to get that in there.
Yeah, we'll probably do it after Shawn. So, so like we said, they're changing dates a lot, so you just have to kind of be nimble and, like Sudhir, did check it at 10 days if it turned into 10, and, if it still looks good, then great, but if not, then, pass. That's what I would say. So once this, comes in and, you create the alerts on there, it'll populate those trades for you. So, there's a slight issue right now with the volatility rise that they're working on. It's not populating properly, but we should have that fixed shortly. Excuse me. Okay, so that's earnings alerts. The other thing, Russ asked us the other day, or asked me about, finding out stocks, like what ETFs they're in and like what ETFs had what. So if you pull up a symbol in the stock overview here, all the way to the right, it gives you ETF exposure. So it tells you, the weight, like all the different ETFs that it's in. So Apple's in a ton, right? 133. So that's how you can look it up from the symbol. If you want to look up the composition of an ETF.
Somebody's stretching or yawning.
And if you pull up like XLI, I guess I'm boring someone. So if you pull up like XLI and that ETF overview, then you can, pull up the holdings and show you everything that's in there. And the other way is if you're in the screener, the custom screener. If you go into stock filters and constituents, so if you type in, XLK, and you can say I want it to be a certain percentage of XLK. If you want all of them in there, you just put 0%, so it's greater than 0%. And if you search all symbols, or you can do liquid options to find which liquid ones are in there. It'll pull up that list so you can should pull up that list. Yeah, there you go. So it'll give you all the symbols that are currently available, in our system. So you can create like a stock list from that if you want to, look at things that way. So it's just something that came up, and I'm sure, if one person has a question, and others will probably have the same question. So I wanted to show that to you guys. So any questions on the stuff we've covered so far? Yeah, okay. I was going to let Shawn take over here and run with it for a while. You there, Shawn?
Yeah, no problem. How's everybody doing? So, yeah, I mean, those fixes were good. So a lot of improvements that we have going on. So like Josh had mentioned, any feedback with some of those pages, can help us kind of look at different things and kind of push that over to Ashok and those guys as well to see if we can get some of those things, fixed and working for us. So let me see real quick. So let me log in. So there's a couple of things that have come up, recently that I wanted to go over and just make sure we're all, kind of on the same page. And, if there's things that we're doing, we want to make sure we're using, not the same analysis, because we want to have some different ideas and things like that coming across the board. But when you're using the screeners and things like that for the earnings trades that we sent out, we want to make sure that we're, using those same screeners, or at least similar screeners, so that you can get similar results to what we received on that earnings plan, and then kind of make adjustments from there. So there's a couple things that we can look at. Josh briefly showed it a little bit ago. We can go into the general settings, and then from the general settings, you can actually change a lot of the defaults that we have set up in the system, and you can change them to different things that you want to look at, on a daily basis, and then you can make adjustments from there. But it kind of saves you some time doing that. If you go into general settings, and then you go into your signals, this is where we can change a lot of those screeners that we've been using for our earnings tabs. If you want to do that on your own, that's great. What I had up earlier was I had up this page, and then on another screen, I went to DelphianTrading.com, and you can actually pull up this resources page here. So we go to DelphianTrading.com. You can go to resources, and then under resources, we have our earnings section here. If you hit view and then scroll down, you can actually pull up all the different documents that we have available on those different, or just the kind of the intro document that we use, similar to the PPT, but the document that you would look at for a bullish pre-runner, kind of explaining what the bullish pre-runner is, the theory behind it, and some examples and whatnot. But I used this screener sample here to actually set up that screener within Delphian, so I could save it. And then if I had a call from somebody regarding the earnings plan, I could just pull it up and it would already be configured properly. So you can see here, just on this little readout for the bullish pre-runner, it says close 15 days before is going to be greater than 3%, 7 out of 10 of the earnings. So what you can do is you can come in here, click on this first one for the bullish pre-runner. If I click on that blue link there, I can actually change it to whatever I want. But like I said, I mimicked what was on the page before on the resource page. So it says close 15 days before greater than 3%, 7 out of 10. If you click outside of that, and then you always click save, it's going to save that particular functionality. So then whenever you go in there that's going to be the automatic screener that it pulls up when you pull up the earnings and you pull up the bullish pre-runner. So I went through and I just set all of these up just for my account so they can match what we have on that resources page. And you can do that. You don't have to obviously do that if you have a certain set that you like to look at. Obviously anytime I go into the earnings, if I know there's something that I'm looking for, I can change those pretty easily on the earnings page. But at least this way it'll match with what we have on our resources page if you wanted to do that for each of these. Josh had mentioned earlier that we have some of the newer ones for the expected move. So what you might see in your system now is the coding or our IT team basically had put in there these two screeners automatically for you. So for price movers and price non-movers, everyone should have these particular screeners set up as their default right now. And then if you want to change that, obviously you can change that as well. So we have the ability to push that over to you so you can see that as your default, but you can change that. So has anybody not used this particular section or any of the general settings to make those changes apply to your specific platform?
I've not used it, but I found it, so I'm glad it's there.
Good, good. Yeah, and you can change it on a lot. I mean, you can see right here the signals. I mean, I could change the state transitions to automatically come up as state 8. As Sudhir had mentioned, if I'm somewhat bearish, maybe I don't want to look at state 1s. Maybe I want to start looking at state 2s or state 8s. You can change this one to show you state 8 when you log into that state transitions page. So, there's a lot of good little features within this general settings that you can use. So kind of just play around with it a little bit, and it'll make, you can change things from your stock list to these screeners and different things like that. So usually I just leave mine as whatever they sent me over a long time ago, and then I change them as I see fit. But like I said, I wanted to kind of make some of these adjustments because I was getting some questions regarding why my list was looking a little bit different from somebody else's list. And, it could be something as simple as, 3% for 15 days, 9 out of 10 earnings. So if you do that, then obviously your list is going to be smaller than if it was 7 out of 10 or 5 out of 10. So, some little tweaks like that can make a huge difference. So, and I don't have a problem, obviously, if you use 7 out of 10 and then you say, okay, well, my list has 50 now, maybe I want to get a little more narrow. And then you can say, okay, well, what about 8 out of 10? Now I have 30. What about 10 out of 10? Now I have 2. Okay, well, you have 2 probably really good candidates depending on, what the back test results show and what it looks like moving forward as well. So yeah, so play around with this, make sure you're saving it. You can always then, after you do that, you can go back into like your earnings page. If I go into earnings calendar, and I'm going to click on either the mover or the non-mover, and this is where you're going to see. So if I click on price movers, this is where you're going to see that new screener that we pushed over, like Josh had mentioned earlier. You're going to have a price change. You can see the screener automatically comes over as price change is greater than or equal to, in either direction, the expected move percentage from earnings day to 1 day after for the past 4 out of 10 earnings. So you can see that this is going to show you that the price change on these particular symbols typically moves greater than or the same as the expected move. And then if I click on it, you can see we have that expected move right here. So you can add that as one of your selections if you want to do that for your prices. So then you can use the screener to say, hey, these stocks typically move outside of the expected move, or these stocks typically stay within that expected move. This is something fairly new that they've pushed through for us. So I'm still kind of going in there and back testing it, but feel free to ask myself or Josh any questions. I'm trying to come in here and set these signals up and then push them through like a normal back test to see if I can find stocks that typically stay within that range or typically move outside of the range. And then what we're going to try to do is adjust the mover and the non-mover list to maybe hopefully get a better list based on this expected move screener that we can use.
Hey, Shawn?
Yes.
Can we enhance it, say, beyond the break-even points? Because, we might say 5 points either way, but when you're talking about the break-even, it narrows that arrow point to much less.
Well, I think your break-even, and anybody can correct me too, but I think your break-even is going to be based more so on your strategy, right? So We might be able to put something like that within the strategy selection. So once you say, hey, I want to trade an iron butterfly, I want to make sure and add something in based on the break even, but I'd have to think about that, right? Because your break even is not really going to apply here, because your break even for your trade might be different from the break even for my trade if we set our strikes a little bit different. So that's going to be more of like a trading strategy design, but I'll have to think about that and see.
Shawn, I think this is great because this has been the problem with our iron butterflies. We never could anticipate always whether they were going to move beyond the expected move or not. I think this is wonderful.
Right. Yeah. We look at that earnings graph to kind of get an idea of if it stays inside or outside of those bands. And that's one thing I'm wanting to do, is to go in there and find a good list of symbols that stay within or move outside of it, and then compare it to the earnings graph, and then just do a little more testing on it just to make sure that, you know, it's getting the results and getting the data that I expect it, for the lack of a better word, to get, right? And then I think if it does show that, then I believe that the results are going to be fairly promising for those movers and non-movers, and, you know, even that vol crush as well. So the vol crush, we're using a little more volatility of it in there as well, but those are some that we're working on as well. So we're trying to get some different volatility screeners in here as well. So if we can match up the expected move plus those volatility screeners, I think we're going to come up with a really good list of stocks. But yeah, you know, before that, I mean, I think based on the break even, I think that's something we would add into like in our trading strategy. And if we can do that, think of a way that it would show value. I think Ashok's willing to listen for sure. So I know we have something in there, Josh can correct me if I'm wrong, but we have something in there where you can say you want your credit trades to be a certain percentage, like your credit you receive has to be a certain value within your trading strategy when you're doing something like a bull put and you're collecting a credit.
That's
So
how trade rolls are in the option screener, I think, too.
oh, okay, yeah. So we'll have to look at that and see, but that would be interesting if you could verify that you break even based on the credit that you're receiving. So yeah, and these are all things too, like to put in that feedback if you can, you know, put in that suggestion or feedback spreadsheet, because these are things that we bring up to Ashok, and if we can come up with good reasons of why we need them or how they add value, then he's more than willing to listen and put them in, depending on, you know, how much time it takes to do it. So, but yeah, so this one's one to kind of play around with. This one's one to mess with. You can find it here. You can also go into your stocks and go into your screener. So just like you would use any other screener within the system, you can come into the custom screener. And if you go into stock filters and then earnings, you can see it here as well. So you can add this expected move into this screener section. And since it is a signal, you can obviously add that into like a backtest signal as well if you wanted to do so. So it's another one to kind of play around with.
When would you include the seasonal yes versus no?
That's just saying basically like an earnings seasonal trade. So if something happens typically the first quarter, or let's say it happens typically in the last quarter or the fourth quarter because you have Christmas time or New Year's, you could say you only want to look at that particular point in time for those earnings. So you would look in that fourth quarter, right, Josh?
Yeah, just, it'll narrow it down to whatever quarter is coming up.
That particular earnings result or earnings announcement quarter, yeah.
Look at all, like the last 10 Q2s. Yeah.
Right. So that's one. So I typically will do no, but yeah, you could, if you knew you just wanted to analyze that particular quarter for whatever reason, you could run it based on that as well. You know, assuming that, you know, Apple always has a good first quarter based on, or a good fourth quarter, so their results will come out the first of the year, just because of you know, Christmas time, people buying their new iPhones or whatever the case may be. Maybe you could see how that earnings reacts for that particular quarter based on that time of the year. So.
I mean, if you're still going 7 out of 10, is this still going to be 7 out of 10?
Well, yeah, Josh had just mentioned, I haven't used it that often, but I believe it's going to do your past 7 out of 10, like Josh said, Q2s or Q4s. So instead of doing the past 7 out of 10, you know, 2.5 years, it would do 7 out of 10 years only using the quarter two, the second quarter.
Okay.
So yeah, just use these. You know, we can look at the resources page to kind of set up those if you want to do that. That's a great tool. I would say, you know, again, these general settings are going to be pretty huge for different ways that you might want to make some adjustments and things like that. But you can pretty much do any type of adjustments here. You can say, you can change, you know, your dashboard, your default screeners, you know, different modes within the system, different time frames on your charts, things like that. So there's a lot of different areas within this general settings. I think that, you know, you can go in there and make some great adjustments to your platform and hopefully just kind of speed up some of your own functionality of when you're actually going in there and doing tests and things like that. And then, yeah, so I had that, then movers, non-movers. Josh showed you the virtual portfolio. So I think that's going to be, you know, a great tool to use. I think that's going to help us a little bit, kind of be able to scroll over and see some of that information using that slider. You know, you can use this slider like Josh has shown. I'm going to see about getting this expiration added in there so you can see the expiration kind of goes away. I think if we have multiple positions for AMD, I think you want to see the expiration there. So, you know, if you're talking about your October options or your January options, but I have to look at that as well. And then obviously the scrolling portion so that this part stays as well. But this is a great tool. I had a problem before scrolling over and seeing the position, seeing, you know, which position am I talking about my risk or my return on capital. You know, I hope a lot of people are using this as well. This virtual portfolio is a great tool to track some of this stuff, you know, that we have going on. And obviously if you find a strategy that you believe works, you can go back in time and track it back in time as well, depending on certain parameters and whatnot. So it's a great tool to use that way also. Yeah, the scroll over bar is really good. I forgot what I lost my train of thought for a second. I apologize. Does anybody have any questions? Has anybody been using the virtual portfolio or have any questions on the virtual portfolio? Good. So what I was going to mention was what I'm going to try to start doing now. I spoke to Josh about it earlier. He had mentioned it to me, is we're going to start tracking these earnings Q3 results as well. So we just started with our earnings plan. There's some that had come out, like we just noted, you know, the Fastenal or the Goldman Sachs had changed dates, things like that. So we're going to start adding these into a virtual portfolio in the system. And I'm going to see what that looks like over the next couple of days, meaning if it's tracking everything the way we think it should. And then depending on what it looks like, you know, I can share it with the group if everybody wants to get it. But, you know, basically I'm going to try to track those earnings for the Q3 that we put out there on that earnings plan as well. So yeah, I mean, mine was pretty short and sweet what I wanted to go over, but, you know, based on the general settings, the earnings plan, that we sent out, you know, that we did the webinar last week with, or the virtual portfolio or the screeners. Are there any questions on any of that information that we can, you know, kind of cover right now?
Shawn, Jean, I have a question about if we're using like the bullish pre-runners and we're testing the different strategies, and we decide, okay, the bull puts seem to be as favorable as the bull calls. Seems like most of the time they are. But would you not change the expiration date to a little bit shorter than or are you keeping the expiration date the same for the long calls, bull calls, and bull puts, I guess? Because I was like, well, I usually do bull puts and bull put spreads on a shorter thing like 30 and 45 days, but this is set up for 60 days. So what are your thoughts on that?
Yeah, that's going to be a personal preference, and I'm with you on that. So typically if I'm selling a spread, whether it's an iron condor or a strangle or a straddle or a bull put spread, so if I'm selling something and collecting credit to do so, in my mind, the shorter the time frame, the better. You know, I want those options to come to expiration pretty quickly because I want to just be able to take my credit and move on. Sometimes you're not going to get the credit though that you think, right? So if you're doing something 20 days out, you might not get the credit that you're looking for. So it might not be worthwhile based on the risk to reward. So you might need to go out, 50 days to do that. But that's just going to be kind of a personal preference. And I think that's really going to show, what does the back test show when you do that? Does it show a more promising strategy 50 days out versus 20 days out? And if there's a huge disparity, then I'll just have to make a decision based on that. But yeah, I typically will try to find it shorter than 60 days if I'm selling, bull put spreads, or if I'm selling
You
any
could
type
go
of
ahead
spread.
and get in at the same level of time, like 14 days or 20 days, whatever the long call or was. We could still use that, or we'd be. I mean, we've kind of tested it both ways, and so that was my only question that kind of stood out for me: is why are we going out farther if we're doing? But then that would change a lot of stuff. But, yeah.
And I think with the long calls and the bull calls, from what we've seen on some of the testing, is once it hits that 20-day out window and your time starts getting shorter, you really start losing a lot of value on those options if you're long those options. Whenever you purchase those options and your time is starting to shrink, it seems like that value starts to dissipate quite a bit faster if the stock's not really moving. So I think that's why it's more prudent sometimes to buy those 90 days out when you're buying those long calls, like in your bullish pre-runners.
So you're changing that from 60 to 90, do you think?
On these right here, it's showing as a long call, and they're showing 90 days.
I don't think mine shows that. I guess I didn't get that.
I'd have to look to see on our resources to see what it shows up as for some of those. So
I thought it was,
yeah. So
this
here's
is
60.
Dave, and I sort of was agreeing with Gene. I thought it was 62, but let me throw 2 cents into Gene's question about duration versus your expectation of taking profits. I think when you're choosing between bull put or long call, you really have to. It depends on your level of or your degree of bullishness. If you're, and you kind of have to get a feel for this yourself. There's like a 45-degree line on being bullish or some other line, right? So the more bullish you are, the more you should be leaning to the long call. But and then you'll get paid off more, even if you're taking only getting out at 25%. You'll get out quicker, which is desirable, right? That's what Josh was alluding to.
Yeah, but Dave, you're spending more money in hopes that this is really going to move. I mean, sometimes they move a lot, sometimes they don't move very much. So,
right, that's what I was saying. It depends on your expectation of how bullish that is as to kind of where you make your choice. And
isn't this market environment kind of
volatile? Yeah.
Do we really think they're going to move very much? I don't know. I guess I'm just suspicious right now. So I like shorter term things, but not for, when you're buying, you need to be at least 60 days out and preferably 90, but going through the earnings season and the pre-runners, then I can understand just keeping it at 60, but maybe 90. I don't know. Because you're going to close it anyway.
Yeah, and you can see here, I mean, from what we have on the resources, we have 60. And that's what days to expire on that long call. And that's what I mean. Sometimes I just have my default set up as what they pushed me a long time ago. So if I'm trying to replicate the bullish pre-runner results that we have on that resources or that webinar that we did last week, I'll say, why are these showing up wrong? And I'll say, oh, okay, well, I got to put 60 here, and that'll adjust it quite a bit, So these are just some of the defaults. So I apologize. I didn't mean to confuse you with that. But yeah, I'll try to go longer out. I mean, my long calls, if I can purchase more time and still keep my risk within reason, then I'll do that, obviously. Or I know that I want to try to be out of these options, prior to 60 or prior to 20 days before expiration, just because I feel the values start getting sucked out dramatically. But I think you'll find, a decent difference between your long call results and your bull put results when you run the back test on them. But again, you want to make sure, I mean, if you're risking, if you're doing a trade like let's just, for one of these stocks here, let's just say Morgan Stanley. I mean, if you're doing a bull put spread on Morgan Stanley and you're collecting, $80, but you're risking $420, then you just really have to kind of put that in your own perspective and say, okay, does this match kind of what I'm trying to do in this particular scenario, and if the $80 credit just isn't your cup of tea, then you're like, all right, well, maybe I do just want to do the long calls, but again, I think with those bull puts, it's really hard for me to argue against the fact that if Morgan Stanley's at 47 and I'm selling a 42, 40 put spread, I mean, the stock really has to drop, $5 before I even get to a point to where my short option's getting exposed. So $5 on a $47 stock, you're talking about almost a 10% move, right? So the stock can move sideways, it can move up, it can move slightly down, and I should be okay on my bull put spread. Whereas the long call, you really just need the stock to move up, So it just depends, your trading strategy. And I know your trading strategy, Gene, and what you like to do. But yeah, I think if you can get the right risk to reward on selling those put spreads and do a shorter time frame, I think that's the way to go in my opinion.
Thank you.
Shawn?
Yes, either one.
Yeah, I have a question. This is Gail.
Yeah.
Weeks ago, you put out a document that was doing the state 2 transition target agreement, but I can't find it. Did you guys attach that anywhere into the Delphian system?
I don't know if we did, but if we didn't, I can make sure I send it to you.
Okay, please do, because I've looked back through past emails, everything, trying to find that. I used it originally, but coming back to it. By the way, I'm using that, set up alerts and so forth, 2 for 2 have been good.
Yeah, you mean in doing the state 2 target 3 met?
Yeah, I figure in this day and age, this condition, that there's probably enough of those stocks, and I just picked the ones that consistently paid off. But I figure there's enough stocks that are hitting that target 2, that state 2 target 3. So
Right.
far, I've got alerts on 2 of them, and they've both been good.
Good. Yeah, I mean, we put that into our studies too, right? That one's in our. I was seeing if Josh had shared it in that earnings.
Yeah, I pulled it out. The folder
Oh,
was to. I figured everyone downloaded it.
Okay. Yeah, we'll make sure to get it to you.
Put it back on it too.
Is it out there somewhere that I can download it again?
I can send it to you.
I'll put it in the folder.
Okay, thank you.
Thank
Okay.
you.
But yeah, that's one of our studies as well. With our studies, when we originally set up the, our studies here, we use that state 2. I think we use state 2 target 1 maybe as one of the studies with the signals that we put within these studies here. And that's just because we found that to be a really useful tool, especially in this bull market. If you find stocks that are in that temporary pullback, state 2, everybody just wanted to say, okay, well, I'll buy puts. Well, when I did that, my puts were only, winning 20% of the time. And I was like, well, let me try to reverse engineer this and see if, okay, maybe if I bought a call or buy a call, not when it hits its target 1, maybe if I wait a little bit or whatever, and just add some different signals in there. And then that was showing some really good results. So yeah, I'm glad you're using it. And, you got to kind of watch it because sometimes it can go from state 2 to state 4 pretty easily if it's in a big fall, like some of the stocks are, lately. But yeah, I think using that just shows you that there's other ways you can use state modeling to try to be creative. And, we always recommend that. If you can figure out a way to kind of reverse think something, it's great. So
yeah. I couldn't remember if there were some other conditions from the first time I did it. I've just done it recently, but I thought, oh, I wish I had that document again just to make sure there was not something else that was in there. But so far it's good. And thank you for being able to download an Excel spreadsheet. I don't have to do it manually anymore. Thank you, Josh.
Yeah, and we talked about that, and that's a great tool to use, right? Especially on some of those like Josh had shown where you have multiple, symbols that all show above a 90% win rate, to be able to pull that symbol list out like Josh had mentioned, and then take that list and just apply it to a new stock list, and then either use that stock list for what you want it for, or screen that stock list even further to kind of minimize the symbols, and then just kind of go from there. So any functionality I think like that that's going to make the use of the platform a lot easier is great. And like I said, that's what that feedback tool is for, because Josh and I use it a lot, and we have good ideas of what we're using it for, but sometimes we miss things that other people might want to, use the platform for. So if you have ideas, please put them in there, because, if you're wanting it, there's probably the likelihood that somebody else is wanting it as well. So, I find some good, and sometimes we just don't think about it. We're like, all right, we've kind of got set in our ways of the ways we're doing things, and we don't think about it. But then when you start using it, you're like, wow, this is much easier. Let's keep this going. So. But yeah, we use those in the studies there. So, try to find ways like that in the system to use those different, state modeling indicators to say, hey, what if I, state 8, target 2, what if I buy it here? This should be the bottom. What would happen if I bought this stock here when it hits state 8, or what about when it hits state 8, target 3, which might not happen that often, but what happens? Does it typically bounce back into state 7? So you can use those different tools like that.
Yep.
Hey, Shawn?
Yes.
When you're talking about the studies you've got to break out, and what about the studies that we've done through Delphian, the rebound, the high-low, and all that? Are they not been fully tested out to see that they're a good trade?
No. Are you talking about some of the screeners within, like the high-low or the I-low, things like that?
Yes.
No, those are just those are different screeners that Ashok's added in there that they've run some analysis on. And those screeners do, so like the I-low, they do have multiple screeners. I-blue, I-low, they do have multiple screeners within this screener. So the I-low price has a couple different signals that make up that low price. I don't know if the low price does, I'm sorry, but I know like I-blue does and I-trend does. So no, that just means that these are additional screeners that we can use, but we could add those into studies, and you could come up with your own study for that. It's just those other studies that we set up in this resources page are just ones that Josh, Ashok, and myself have come up with in the past, saying, okay, well, we like state modeling, but let's maybe add some different indicators on top of state modeling and see if we get the results that way. And some of these we found some really good results with, and Josh and I kind of went back and forth and said, okay, well, this was years ago. Okay, do we make these studies available to everybody? Because some of these work really well. And then Ashok says, no, let's make them available. So then we do. And those are just some of the ones that we come up with. These are just a handful that we've figured out. There's probably, way more that are you have the ability to figure out within the system using that I-blue or that I-low. So those are great signals too. These are just separate ones that we've designed, years ago. I don't know if that answered the question properly, but yeah, these are great signals too. I haven't used these all that often, but taking these and matching these up with different signals or different back tests in the platform, I think are great. I just haven't used them that often.
Okay.
But yeah, that doesn't mean they're not good. And I think I've told this to a couple people before. I kind of get stuck in my ways of certain things that I'm doing, and I find that takes up a bit of time. The earnings stuff, some of those earnings trades that we've been doing, the bullish pre-runners, the bearish pre-runners, those volatility rise, the state transitions, the seasonality ones. So even just in that group of 3 sections within the platform, I could sit there, for an hour or 2 during the day and find good stocks to trade, a handful of stocks to trade for that week. So that takes up a bit of time. But, I'm always looking for other screeners like these that I can use. I just don't have, that much time to do it. So, but
okay. With that in mind, Shawn, do you have a Shawn's list?
I don't, I have a notebook, that I basically keep and I write down by hand, like today's date and the stuff that I'm working on. And if I find good trades that I've done that I got out of, I put those down in that book, and then I have to go back and kind of pull them out. But yeah, I have a handful that I know that work really good. And, I share them with you guys, like for that vol crush stuff, like Tesla, Tesla's a scary one to do because it's so expensive and so volatile normally. But around earnings, that thing just typically stays within that range of that vol crush that we're looking for. So there's some like that we have, and but I don't have it specifically in the system that I kind of run through. I do a test like we do with the earnings plan. I look at that thing and I try to track them. And if Josh and I's done the legwork on them, I typically trade them unless those results just don't show something for whatever reason. But for the most part, I trade them.
Okay, but we don't see it, which ones you trade. You're just saying you trade them.
Yeah, I mean, I do just like most of you do. I mean, I'll come into this state transitions page. I know Josh mentioned for the bulk portion of it wasn't really working properly earlier, but I come in the state transitions page, and if I see a handful of stocks that show up on this list that perform well in that state one transition, and they show an 80, 90, 100% win rate, I trade it for that day. So I come in here every day and look at these. And the same thing with the earnings. Sudhir mentioned the Goldman Sachs earlier about the date being moved, for the vol rise, but that's one that I was looking at for the vol rise, the Goldman Sachs. There was another one I had written down somewhere.
Yeah, I have a comment about your little notebook there, Shawn.
Yeah.
You'll find that if you're kind of following a strategy, you're focusing on a certain strategy for a certain period of time, you find out it's not working. It's not because the strategy is not working. It's because something else changed, and it's not the right strategy now. So you might, as you're keeping, if you're doing what we're suggesting here, keeping little notes and stuff, keep track of which strategy and the time frame that it was working on, if you can somehow relate the two, because that's what you have to get good at, is figuring out when to change, because the circumstances demand it.
No, I definitely agree with that. I mean, the vol crush could work perfectly on Tesla this past quarter, but then next quarter, things could change dramatically. So you always want to make sure and kind of, I want to make sure I'm rerunning the test, and I'm kind of analyzing what's going on, right now with the market and what's happening before I put that trade on. Because I think that is crucial, like you say, Dave. I mean, there's a lot of things in the environment that could be changing. You always want to take that into consideration, especially with the test. I mean, your back test shouldn't change too much from quarter to quarter, but if one shows up, on the state transition, state one, or shows up within the seasonality, that could change a little bit. So you just always want to be back testing them to verify that data before you put that trade in live, for sure.
Hey, Shawn, just like a note on that, we had like some bullish pre-runners. There's one in there like HP, and like oil's been having a really tough time, but that was still testing well until like last quarter. So that's just kind of something to be mindful of. Okay, like this sector is having a really difficult time, so I may want to stay away from that bullish pre-runner. If oil's in the tank.
Right. That's right.
Yeah, that kind of brings up, we talk about, we've got all these stocks for pre-runners, but we've never really had a discussion for post after, after the quarter, which ones did well and which ones didn't do well, and for what reason did they? Is it because it's the oil sector? Is it because the financials? Is it because some kind of news that popped up that made it to be a loss when it said it was going to be 100% win?
Well, that's why I do, if it's below the 200-day, I don't touch it. And speaking of the 200-day, Google is real close. I'm watching it.
Right.
So is that the only thing you use, is the 100-day?
No, 200.
200-day, he said.
And then you got to just do it.
So if it's above the 200-day and it comes up as that bullish pre-runner, right? Are you just the bullish pre-runner or the state transitions?
No, I'm just doing the bullish pre-runner.
Bullish pre-runner, right?
And I had 21. I'm down to 19. I didn't do Philip Morris because that went below the 200. Goldman Sachs is below the 200, and now Google is scaring me. Come on,
Right.
It's supposed to be perfect.
Right.
Did you were you going to place that trade, Winslow, on Google?
That would be next week, I think on the 2nd. So we have another week. So I think things are gonna. Well, I don't know.
Remember, it's on the 29th now. Yeah. Okay.
Google? Okay.
Google. Yeah.
Yeah.
And-
Anyway, we'll see.
And that's perfect. I mean, I think that's exactly where, we tried to go with some of the studies that we did. And I think that's where you should try to go with some of the things that are coming out now, so take that bullish pre-runner, which is statistically showing some great results based on earnings, but it's just based on the earnings report. But if you can find something like, okay, well, the stock has to be above the 200-day moving average, and X has to happen and Y has to happen. If you can add those signals in there, you might have a list of 50 originally, but now if you have a list of 10, now that list of 10 has been vetted and looks pretty good based on adding those other indicators in there. So I think that's great. I mean, that's exactly what I feel makes that back test, makes our platform great, because you can add those multiple indicators in there when you find them and you think they're going to fit. And when they do, that's just going to, I think, offer some better trades for you.
I mean, the one thing that I did, and I shared it with Gene, is that that stock list that you provided, I extended it to see, okay, what grade are they? So I know which grade they are for each one of them, and the ones that are D, I'm not going to do.
Right. Yeah, and that's exactly, like I said, I think that's perfect. I mean, that's what I would hope that you get out of some of the things. Now, some of them, if some of those studies, if we have 3 or 4 or 5 different signals together and we're coming up with a pretty small list, if you add 2 more signals on there, you might not, your list might be 0, and that's fine. That's obviously, if don't be worried if you don't get any results. You just might have too many indicators on top of each other. But I think that's great. I mean, if you can take a list of 30 and narrow it down to 10, I mean, that's what we're looking to do.
The one thing that is important is knowing the open interest and volume, and what is an ideal. If we're talking about 60 days up front, they might not have much open interest or volume at that point for that strike price.
That's true. Yeah, I mean, I've seen some lately where that, if I go out 60 or more days to the next expiration, the open interest is really low, or the volume's really low, and most people are trading that front month option. And if that's the case, then typically I'll stay away from it, especially if I'm doing like a long, or where I'm buying the option or buying a put, because if there's only 25 days until this thing expires, who knows what's going to happen over the next 25 days, right? This market could be just pretty choppy. So if that liquidity is not there, then I just won't do the trade.
What's your minimum
for the open interest and volume?
Correct.
I mean, if I'm trading just a handful of them, I mean, I want, it can be pretty low. I mean, the volume, I would say around at least over 100, and my open interest to be that high as well. But I've seen some as low as like 50, 40. But again, I want to make sure if it's that low, I want to make sure my bid-ask spread is fairly tight. And typically you won't see both of those together. But I have seen it some. Yes.
I was going to say volume and open interest are, I think, more of a function of news than most anything else. And news also drives volatility. So they're kind of hand in hand there. If you're looking, when it's noisy, look for lots of open interest and opportunity, I think. When it's quiet, you don't get so much.
Right.
Yeah. Shawn, I had a question about that. Actually, last Wednesday, you were talking about looking at the bid-ask spread divided by the midpoint of 1 to 2%. And it's true. We want to do for these pre-runners the November 20th calls. And there's not a lot of volume or open interest yet, but maybe by next week, if the bid-ask spread is still okay on a percentage basis, maybe under 6 or 7%, I'm tempted to take it. You just put an order in at the midpoint and leave it there.
Right.
The other question I had was, when during the day should we take the order? I was doing it at the end of the day, but really you want maybe at 10 o'clock if you can, if it's not in a downdraft, if the market's not going down, if it is, I'd wait till the end of the day. But if it's not, maybe you pick it up at 10 or 10:15 or so.
Yeah, I'd mentioned this to someone the other day, and so all of our bullish pre-runners and things like that are tested, based on the end of the day data, because that's what we're working with right now, So
right.
I would try to steer as close to that if you want to follow it, as close as you can to the backtest results, staying, near the close, because that's what that data is coming off of. Because obviously stuff can happen overnight. The markets can move quite a bit overnight. And if it's a stock that doesn't trade overnight, you can't really see what's happening. But I also feel that I think if you wanted to get in there a little bit earlier during the day, you can do that. just know that the data that you're pulling for the back test is pulling that end of the day data.
Yeah, because the last time I did it, I did at 3:30, 3 to 3:30. And then I was thinking, oh, no, you should do it earlier. But okay, all right.
Yeah, so I mean, I feel if you wanted to get in there, after, 1, 2 o'clock, something like that, to give yourself some time to kind of navigate into the trade, especially if you're doing like a bull put spread or something like that, and you want to give yourself some room to navigate, I would, say, hey, that's not a big deal. I just want to make sure that I know that, the back test is running off that end of day. Now, once we get that intraday data and we can use that, then we can kind of start narrowing that time frame down a little bit better and say, okay, well, getting in at 1 versus getting in at 3:30 doesn't really make that big of a difference, or it actually improves it based on the back test. So then I think you can get more solid results that way.
Yeah, okay.
Or solid analysis, excuse me. But yeah, I mean, as far as the open interest, I just want to make sure that there's interest in that particular option and there's volume there. I mean, I can't really say that I have a set number, but you do want it to be fairly viable, because if you're trying to get into a 5 lot of a trade and the open interest is only 10, I mean, you're working for half of that open interest just for yourself. And then when you want to get out, if that stock moves tomorrow and you want to be able to get out of that trade tomorrow, you just might have a very difficult time doing that. So that's really the main concern that I find when I'm looking at those open interests and it's fairly low is if this move happens fairly quickly and I want to get out fairly quickly, I have to understand that if that open interest is low, me getting out is probably not going to happen. If it does, they're just going to make me pay for it, right? So but if the opportunity is so good that I don't mind that open interest being that low because I really think that stock is going to make that move, then I might go ahead and take that risk. But you just have to know that you're adding more risk onto the table when you're doing that, because getting out just might be very difficult. So, it's not that it's going to be impossible. It just might be difficult. And one that I brought up was because that KSU has come up on our earnings plan as a trade that, the Kansas City Southern. And that's one that I had mentioned, November options, they're pretty light. I mean, they're really not much. There's nobody really trading those November options for that KSU. And so when I look at that, you can see some KSU options for November. The bid-ask spread for some at-the-money options is $9.50 at $12.40. So you're talking about a $3 wide bid-ask spread on on what should be maybe an $11 option. So that's a huge disparity.
I did KSU before and made money on that in about 3 days or 4 days. But this time I rejected it because the bid-ask spread was too large.
So wide, and nobody's really trading those November options. And even October has a little more volume at open interest in there, which is great. But those options only have 23 days until expiration. So, and even that bid-ask spread on those is a little bit wide as well, right? So even the options that I'm looking at right now, I'm looking at some $190 call options, and KSU is at 181 for October expiration. The volume is 205, but for the day, but the bid-ask spread is 260 at $6.
Yeah.
So I mean, your spread is almost just as wide as, your spread is almost just as wide as the bid is, the bid size on that one. So, which is crazy.
Yeah, I'm going to do CSX or try to do that.
Yeah.
Yeah, Winslow, you made a point earlier that I thought was interesting, and kind of ties to a couple of just recent observations together here a little bit, and that was about the 200-day. You were mentioning a lot of the big names, mega caps were approaching 200-day. SPX is one to watch there too. And why is that? So what's that tell us? There's some fatigue in like the bullishness, right? And so there's been pundits calling for the FANG stocks to probably lead the way into a little more consolidation or fatigue, because who knows how far they've run up maybe too fast, even though they pulled back, right? And the election is coming up, so more people are just putting more money into cash, and there won't be so much open interest in that quarter, probably because of the election. So
I heard a funny thing. They were saying that now that football season has started, all the sports bettors have left the stock market and gone to Vegas, and betting so that's why Apple is crashing down. They were pushing it up. I don't know. It's just kind of a joke type thing, but I don't know. It's tricky, but you can't. There's always news, so you have to go with the numbers.
Right.
And at some point you have to say no, and that's the 200-day.
Yeah.
And another interesting note too, I mean, you have the market going up, and Josh might talk some of this later when he goes over the market analysis, right? But so you have the market going up as it has been over the past, however long. But somebody mentioned this to me the other day. You look at stocks, or you look at companies like, Robinhood, and then, like a lot of people are using Stash, and I think Schwab is doing it now as well. So now you can go into companies like that, and you can buy fractional shares of a company. So you can say, hey, I have $100 I want to invest, and I want to buy as much, Google with that $100 that I can buy. And they're like, okay, well, here's a 0.25 share. So they let you do that, but somebody still has to buy a whole share of Google to be able to distribute that out, right? And, we're not talking about $25. We're talking about probably thousands or even millions of dollars going into those different companies to buy those partial shares by people that maybe are sports bettors or millennials or people that really don't know that much about investing. So that money has to come from somewhere, and it has to go somewhere and buy lot shares. They can't just buy a fractional share from the market. So that could be a big portion of why you might have this partial run up in the market as well, as of late, right? So I know Schwab just sent something out. I think they just started. I mean, I got an email on that the other day, so I don't know how long ago they started that, but you can do that same setup through Schwab now as well.
Yeah, we're also suffering from lack of fatigue and stimulus, both from the Fed. Seems like they're kind of like withdrawing from any more stimulus, and the policymakers don't seem to be giving any more free paychecks out. And now there's even talk about not until the election, because nobody wants to be have that go against them because the election's coming up. So, fatigue may last longer. That's why no news in this particular time spread. That's if there's no news in those two areas, what moves the market a lot, right? Interest rates, the Fed's not moving, paychecks aren't coming out, so things are like, oh, okay, we're just kind of like withdrawing from everything. Fatiguing was the best word that you used, Winslow. I think that's what we feel right now.
Right. That seems fair. And then, yeah, so what I was going to show you too on this one, just real quick, was the state transition. So when we're talking about stocks that transitioned, and your different inputs in the market, SQQQ, which is the inverse of the QQQ, went into state one the other day. This is on 9/21, so went into state one on that day. So, you might say, hey, well, I'm not bearish the market, or I am bearish the market, or whatever. But, you have your own personal analysis. And if that's the case, there's only 3 trades here, but let's say it was 50. If the trade amount was different and the win percentage was different, you could say, okay, well, great. It moved into state one, but I'm not bearish, so I'm not going to do that. So sometimes you have to take some market analysis of your own into what you get with these results and say, okay, well, this shows up as a great trade, but I don't believe it. Or it only shows up as a 33% winner, but hey, I really believe that this market's selling off, and maybe I want to get long, SQQ. So that's just, my thoughts on that, because we had just mentioned that a second ago. So.
Well, there's the market in the individual stocks. Did anybody listen to Battery Day yesterday? I'm just curious as to this group. It's a pretty smart group, I thought. Anybody view that?
I did, and I kind of watched. Oh, go ahead. Go ahead, Jean.
No, I was just asking, what did you say? What did we listen to?
Oh, the Tesla's Battery Day, and I'm not bringing it up because I think it's Tesla's good, bad, or ugly. It might be all of those things. Who knows? Not me anyway. But it was a real interesting presentation, and if you didn't watch it, I suggest trying to catch it. And it's kind of like in 2 parts, just so you don't waste time. It's fairly long, and the first part of it was all about Investor Day and updates on board proposals and stuff. So don't get worried about it. It picks up about halfway through, and he talks about energy, sustainable energy, and things like that. So, if you're looking for bullish things to think about in the future, you might catch that. I was pretty impressed, and I'm an engineer, and it's not that easy to impress me with engineering blurbs, but I thought that was pretty interesting. So just saying, just saying.
Yeah, I didn't watch it. I mean, I'm watching Tesla, so I was watching to see their reaction, and I think their reaction prior to that, Elon Musk had come out with some information, so people were a little skittish of Tesla itself, and then it's coming down a bit today as well. But yeah, Gene, basically they had their shareholder meeting yesterday, I guess, yesterday at 4:30 Eastern time. They had the shareholder meeting for Tesla, and then after that, they had a battery day, which Dave can correct me if I'm wrong, but he was just talking about their battery sustainability and them trying to produce batteries that can go longer hours on one charge, so their cars and trucks and things like that will be able to travel farther. And not only for Tesla cars itself, obviously a battery that's able to produce that much energy for that long of a time can go into more places than just cars. And
the future of cars,
everything, right?
Well, manufacturing and energy are all pretty. He lays out a pretty interesting path there. You should, as an investor, I think there's lots of opportunities in things that were discussed there.
And you could see that. I sometimes watch the overnight markets, in like Asia and things like that, and you could see different companies like Panasonic and different electronic companies like that, technology companies react based on what was going on during that battery day as well. So
life is going to get better.
Right.
So is that why Tesla dropped then today?
No, they dropped it because, well, I don't know why it dropped, but I tell you, another thing is I'm going to listen to a lot of what the analysts say about this, because it'll tell me how much they know about engineering, depending upon how some of their comments are. So.
Yeah, I think from what I've heard, they're a little disappointed that the battery is not going to be available till like 2023. And I think maybe a lot of the analysts were hoping it was around the corner. So when they heard 2023, they said, yeah, it's down like 10% today anyway. So.
Yeah, and what I find interesting.
This wasn't an advocate for the stock or not. I'm telling you, I don't know where the stock is going. It just
just as a whole,
conversation is what you would be good to hear, I think.
Right. Yeah, just as a whole.
I'll listen to it.
So yeah, and like you say, just as a whole. And I think it's interesting too, because my thoughts were the initial reports had come out that he wasn't going to have the battery done until 2023. So that kind of was not the expectations of the market. So they started selling Tesla off yesterday before battery day when that news had come out. So I said, well, great. This gives kind of Elon Musk and the people on the panel to have time to figure out exactly what to say to kind of mitigate that negative remark of not having that battery produced in time. And I think Elon Musk just takes it a completely different route. I'm sure he cares about that, obviously, because he wants to make money. But the fact that they didn't change the tune and kind of put information out there that might help that stock rally, it just shows you, I think, to the viability of that company possibly. In the future.
Yeah. Listen to him. And sorry, I get sort of carried away here, but listen to what Elon says about that and about making money and how money is made. And it's not he's not self-serving here. He's really, he should run for office someday, but he's really trying to help out. He's really trying to help out the world. And the analysts, by the way, the analysts missed it because analysts presumed that Tesla was building batteries to have that be a revenue stream. Not the case. Never was the case. But that's what was wrongly assumed from the start. So they had to maybe back out what they were thinking. But that's not why. Watch the presentation and you'll understand why. It's hard to explain in a few words, but I suggest watching it.
No, I agree with you, and that's one thing I mentioned to somebody the other day, and Josh kind of doesn't like me to say this. I don't think sometimes this isn't a recommendation or any advice that I'm giving anybody, but when I buy Tesla for whatever reason I'm buying Tesla, the stock or the options, I'm not buying it because I love Tesla's car. I'm buying it specifically because, like Dave just mentioned, I think Elon Musk is a fairly smart guy, as crazy as he might seem, and I'm investing in him and his ideas, not necessarily his car. So that's my personal opinion on that, right? So
Totally agree with you. Totally agree.
I
And
agree too. Yeah.
there are YouTube videos out there where they have interviewed him, and he's talked about the things that he's doing, like in the insurance industry. He's considering self-insuring his cars
They
because
do.
the Teslas are really, really expensive. But what he's also doing, he's saying he's accumulating as many hours as he can in a database with his Teslas on the road to show that they are safe. And one of the things that he's considering doing is letting them be used for, you know, the ride shares and things like that. And because they can accumulate the hours that way. So he can prove, no, this is how many hours Tesla has been on the road, and this is how few accidents. So he's really innovating and thinking outside the box on a lot of different ways to improve, you know, his position too. So, but I agree, he's a brilliant man, so he's worth investing in.
So yeah, well, okay, good. Well, yeah, I mean, I think those are some interesting points and some other points on some other markets. And yeah, I haven't watched it, Dave, but I definitely want to kind of listen in and see
Go watch it.
what's said.
But start halfway through, or a lot of times you can use a slider to like
Right, yeah,
see
push
where
it,
the
yeah.
thing is. There's a big pause after the meeting, and I think it's almost an hour worth
Oh,
of
wow.
the battery day. So it's out there a ways. So just saying.
Right.
But
Yeah,
it's
so-
not short. It's about a 45-minute to an hour presentation. It's
Right.
and it's very detailed. So it's for engineers will love it.
Good. Yeah, so back to the platform, and if nobody has any questions really, you know, on what I showed you, like I said, you know, I'll let Josh kind of do some more latter stuff in his market overview, but please, you know, use the general settings, look at the new screener for the mover and the non-mover, which is going to be that expected move percentage, and try to play around with that. Give some feedback and ideas if you see anything. I'm going to be messing around with that too. You know, in the virtual portfolio, we have that slider on the virtual portfolio. Nothing huge to add there, but when you do add positions, you know, definitely kind of play around with that, and you can kind of see those changes there as well. So,
John, I have a question for you.
yes, yep.
What do you think about the iron fly for Costco tonight?
I didn't test it out because did you test it to see what it shows?
I didn't test it. I just thought I'd ask. I'm going to work on that in a little bit.
Yeah, I didn't test it, but let's look at it real quick. We can pull it up. Because Costco had come up as what? It came up as a vol rise, I think. Was that correct? Give me 1 second, sorry.
Yeah, it came up as a vol rise.
As a vol rise. So I kind of looked at it and then I moved away for a second. Let's see, Costco. I think I pulled it up. I put it up on my Analyze tab. I'm looking on another screen too while I'm talking. So let's see. I did put it up on another screen, so something must have caught my eye. So basically, I put it into toss under the Analyze tab. So I think this is what I was looking at initially when I pulled it up. Oh, sorry, I'm on the 21st. Let me go to current day. I think those past 4 quarters kind of caught my eye and how little the stock had moved. You know, and we talked about, so these actually past 1, 2, 3, 4, 5 quarters, how it's kind of stayed within that range pretty tightly. So that caught my eye early. So I did set it up in my Analyze tab in TOS just to kind of see what the options were going for and what type of credit I could receive by doing that. If we go into the calendar real quick, let's see.
Yeah, Shawn, I thought we had done this last quarter. We actually did.
Yes, it's possible. I have to pull it up and see. But let's see. Vol crush. I probably ran it. Let's see.
I think you're too high at 30%.
At 30. Oh, is that 30%? Oh, because it's doing the at the money. That's why. Okay. 1 day after either direction. That's what it was, because it was after that. Let's see. I changed that to the at that money IV one. Let's see what that comes up as. But yeah, I ran it in. Let me just switch real quick for a second. I'll show you something. Share screen. You can see here, I put it in the Analyze tab in Thinkorswim, so down below you can see it. October 2nd, which would be next week's expiration. I did the 345, which is about where the stock is right now. 345, and I did 20 points wide because we can see that 345, it was about $9 and about $9. So about 18 was the expected move based on those values, $19. So I did $20 wide, and it's fairly reasonable. I mean, if I could get $13 to $14 credit, we're sitting right at that, 2 to 1, just a little shy of 2 to 1 if I'm getting $13, right? So $13 and I'm risking 700. So I'm just shy of the 2 to 1. So, we can see. And again, talking about break evens, if we look at that, my break even, if I collect $13, let's say, my break even is going to be $13 above 345, which would be 358, or $13 below 345, which would be about 332. So, we can see those are going to be my break evens to the downside, 332, 358 to the upside. So based on $13 credit. Let me see on the other screen real quick. I'm going to flip back over. Give me one second. Screen 2. Let's see if it pulls up, and if it doesn't, I might be able to find it on my, oh, there you go. So based on this, I mean, we're looking at the Iron Butterfly exiting 40%. Let's do 40% of max profit. We could do weeklies and then skip a day if we wanted to do that. So say 4, just so it would try to pull in, the following weeks. I'm going to hit analysis. And we're still roughly a 70% win rate, a $2 profit factor. I don't know why. I think maybe just because some other things I was doing, I got sidetracked and didn't pull this one up. But, based on that screener, or based on my my analysis tab in TOS and getting that credit of at least $13.50, I mean, that seems like a good trade to me based on this back test results, and then looking at the past 4 or 5 quarters. I think it's a good trade, in my opinion, right? So let me preface that by saying, in my opinion, in my mind.
Shawn,
Yes.
what about, since it's the IV is only about 66% right now, how did that end up in a volatility crush category? I guess I thought it had to be higher IV before you would get a good crush or something.
Yeah, some of mine I've been looking at. I really have been using that price change. So I'm taking the IV out of it when I'm running this initial screener, because it almost seems like the IV is going to be kind of relative, right? Like we spoke about before, like you said, that IV on that front month is around 60%. But what's the relative IV? Is that relative IV for, Costco around 40%? And if it is, then that's up 50%. That IV increased 50%, right?
Okay.
So
go ahead.
Oh,
I see what you're saying.
Because if you're looking at September 25th options, which expire Friday, like you said, that IV is around 60% on the call side and about 60% on the put side. But if I look at October 2nd options, which are next week's expiration, that IV is right around 42% or so on the put and the call side. So is that typically what my IV is going to be, is 40%, and that front month is at 60% now? So if it is, then I said 50%, but it's actually moved up 30%, right? So, but still, is it relatively around 40? And if it is, then there's probably some premium in those options that can drop, off of that front month.
I think it's usually around in the 30s.
So, right. So maybe it's doubled then if it's at 60, right? And I think that's where that relative implied volatility comes into play, in my mind.
Okay.
So
is this,
go ahead.
Was this one on the pre-runner too? It was, wasn't it?
It must have been, right? I mean, it seems pretty fair. I was trying to pull up, let's see, the plan. And remember that pre-runner, I pulled out some to try to pull out certain win rates, but 70% should have been up there. So you have it as a vol rise. I have it as a vol rise here, but not as the vol crush. So I'd have to look to see why it's not on that vol crush list.
And what about your expected move thing that you plugged in to that?
Yeah, I have to play with that one.
Oh.
to see.
Okay.
I tried to run it. On the. Go ahead.
I said we just got that like today. So
Oh,
this morning.
Okay.
Yeah.
All righty. Gotcha.
And I ran a full back test on it earlier, and it didn't come back. It was like still running. So I was like, okay, well, I don't want to show you anything detailed on it because it just might not show something right now. So that's something they just pushed us earlier, and he set it up for everybody. So once Josh is talking regarding on the market update, what I'll do is I'll look to see why it didn't come through this vol crush list here. So, and that brings another point up real quick too. I know that, you know, I want to show it here because it did have a 70% win rate, but I did have to exclude some of the stocks because last time, you know, last quarter we had some in there that, you know, the volume wasn't there, the open interest wasn't there, the bid-ask spread wasn't there, or whatever the case was. I think the list was too great and we got stuck in some of those positions that probably should have been excluded. So I tried to get my list fairly tight for this vol crush list, this earnings plan. And so maybe I missed some out of that. I think like Tesla didn't end up showing up in the group. So there's a couple there that in my mind should have been there. But, you know, I always say, you know, you can look at this list and give you some good ideas of some stocks that we've already optimized and tried to pull out a good list for you. But by all means, come into this calendar, you know, pull up that vol crush list and then run some of that analysis for yourself as well and say, okay, well, you know, your plan says these 10 stocks, but when I ran this list, I've actually come up with 15. So where are those 5 extra stocks coming from? Do they look like good candidates? Maybe the risk to reward isn't what it should be or whatever. But you are going to find some like that Costco. So, you know, that I did exclude some, but I want to go back and look what Josh is talking to see why that Costco is excluded. So.
Thanks, Shawn.
But yeah, as far as that, running that back test real quick like that and looking at that analysis tool that I put up earlier that I totally forgot I did, you know, that looks like a pretty good candidate for me. I mean, those October options, October 2nd options, those 345 call and puts. Put side, the open interest is like 140. Call side, the open interest is about 800. So open interest is there. The bid-ask spread is fairly tight. So it seems pretty good. You know, Costco, you got a lot of things going on right now, right? People are ordering stuff from Amazon. People are ordering stuff from Costco, buying bulk because they don't want to have to go out. So you might get a pretty good, you know, earnings result just based on the fact that more people are using it. But, you know, I think that doesn't, that plays into the move off of the earnings. But, you know, I think we're really, like we said before, we're talking about that vol crush. So we're talking about that volatility coming out of those options. So cool. Yeah. Any questions? Again, you know, as always, feel free to email us, call me, whatever you want to do. We can get onto the system together and kind of run some stuff that way too. If you have any questions, I find that to be really useful when I can sit there with you and we can do it one-on-one. So feel free to sign me up and let me know if I can help you do that. Any questions, just email me. So I appreciate you guys listening.
Thank you, Shawn.
Hey guys, appreciate it.
All right.
Thank you, Shawn.
Thanks, guys.
Thank you, Shawn. Shawn, for some reason I ask you more questions. I think you're just a friendlier voice.
Maybe. No, it's good though. I try to share the love with you because I'm like, correct me if I'm wrong, Josh. Here you go. Because sometimes, you know. So.
Hey, the other thing, I'll go through the market update. Did you want to go through that like non-mover seasonality thing kind of real quick afterwards?
Yeah, I was gonna. I don't want to put anybody on the spot on that one, but yeah, let me send a text and then we'll verify it.
Okay, cool. All right, let's talk about the market here. I already pulled up SPX, so what we always kind of look at first is that the market pulse. So if you remember a couple of weeks back, you know, we're up in high 40s, so now we're down 25. So, you know, we're back in kind of pullback range here. You know, state 8s are actually higher than state 1s right now. So, you know, it's just kind of a, you know, la land as far as the market. You know, it's not telling us one thing or the other as far as, you know, like that overall pulse. You know, it did tell us we were overbought, you know, when we were up in the mid 40s. So it's come all the way back down, 20% from the state ones there. And if you recall, Shook called that when he was on there, he called that turnaround. And what we'd also talked about, and I have it back on the 18th here, just so we can see that target 3, because I've told you guys before, it normally will correct at least to that target 3. So that's right. Let's call it 3,200. So we're not quite down there yet. This is current day, but you can see, it kind of lines up where target 3 on state 2 is pretty much 3,200. So, there's a reason I said all that. It usually gets down to, the target 3 from the previous state 1. And the modeling picked it up where it's saying that's pretty much the key level. Because, as Gail was talking about, and just, I put that list in that share drive. Sorry, segue there. That state 2 target 3 document is now back in, if you can find it, right there. So it's the only Word document in there. So, a lot of the trades that we look for are that state 2 target 3. So this is going to be your key level. I think it'll reach it, at least in the vicinity. My personal preference, not preference, my analysis, just because it almost always comes back to that, at least that target 3. So that would mean, it's going to hit that state 2 target 3. And from there, you just have to be ready to, it's either going to swoop down or, bounce up. So you just, once we get down that level, which isn't too far, I think the market was, we're like 45 away. So, that's kind of the key level, we're looking at, as long as it stays below that entry, it should, it should get through most of those. So this is the key level we're looking at right now for SPX. So yeah, I just wanted to kind of go back and show you, because we had told you, most of the time it's going to get back to that 3. So we're pretty close to it right now. I think this day here, we got the 3,229. So only, like 30 points away from hitting that target. So where it goes after that, we just have to see, if it transitions or stays in here. We've had times where it's kind of just bounced around in here for a long time. But, that target 3 is a very key level. So that's where, it's either going to plunge or, the bounce back starts. So,
Josh?
Yep.
Could you refresh on why the Shook said it would go to the 32, please?
What's that?
Could you refresh my memory on why Ashok said it would go to 3,200?
Oh, he didn't say 32. He's that's me from my analysis on, I analyzed a ton of these where, they kind of blow past that target 3, and, they always kind of end up coming back down to that target 3, when they make these huge moves outside of that. So that's why, just from the analysis of state modeling, looking at this, for years and analyzing different ones that popped out of there, I'd say like 90% of them get back down to target 3.
Okay. Very good, thank you.
So
Isn't Ashok's reason, if it's a 6% above its moving average, the 200, then you need to marry a put, or it's just getting too exuberant?
I don't know that offhand. I don't think he's in the meeting.
Okay.
Yeah, he's not in. I don't know that for certain. I know there's certain guidelines he has. I don't know the specifics on those. So, that's kind of like the SPX. I pulled up the chart here for SPX. I put in a 200. So 200 is, like 3,100, let's just call it. So that would be, like the first kind of pullback. So, could it possibly test that? Absolutely. So we just have to kind of watch the levels, but, I'm fairly certain, no guarantees that, it's going to hit that 3,200 at least, I would say. And then you kind of, if it gets through that, then your next big one is that, obviously, that 200-day, which is another 100 points below. So, but, a lot of the times, this is that area where, the market turns around, right in that area. So that's something you definitely want to be wary of, and we're not far from there right now. Let's pull up Russell too. Whoops. Come on. So this looks just like the other one. If we go back, what we had talked about before was that I don't know why it's slow right now. Shawn must be testing stuff.
I'm running some tests.
Yeah.
But I got to look to see for that Costco trade. So real quick side note, that Costco, since we did the Q3 plan starting like in the middle of October, or that's when I started running it. So I think that's why that Costco got excluded, because I wasn't doing the short of a time frame. I have to see when the next earnings is for Costco and see if that one was captured and why that one wasn't. But I think because I started trying to find stocks like October-ish for that Q3 plan. So that's why.
Yeah. Okay. Yeah, well, the Russell's pretty much now aligned. This is pretty much the same chart as SPX. So, this would be the near-term target there, 1445, 20 points away. This has definitely not been as strong as, it still hasn't hit the high, and at 1600 is still a problem. That we talked about that for a long time. So, this one obviously has been a lot weaker, and I guess once, the pandemic is something that would definitely affect us more than, big companies that have a lot more access to capital markets than, smaller companies like that. So it kind of makes sense. Once this thing clears, as far as, vaccine or what, probably one day after the election, it'll go away. Then would be a time, depending on how the economy is doing, where these could catch up to, like the bigger companies. But, same thing, we're watching the near term would be, the resistance at upward resistance 1486, and that's your support at 1445. So, if they both, the SPX and Russell, kind of hit their target 3 at the same time, just kind of be ready for something to happen one way or the other. Typically will within a few days. So, and a majority of the time, if you look at this next state projections, 63% of the time it's going to go back up. So that's the odds over time. Obviously, that's a lot of occurrences, but just in general, that's, the probabilities of where it's going next. So no guarantees. It could be the 34 time or the 63, but, as far as probability wise, it's more likely than not to go back up. So, I guess I can pull it up on here too. See where it's at relative to its 200. This takes a little bit to load. Any questions on those two? Crickets. Any other kind of questions about, economy, market, or anything like that, or comments? Obviously, people have bias.
So Josh.
Yep.
Just myself listening and thinking, I'm in a hold pattern right now on my trading until after the election. The unfortunate thing, the way I'm thinking, is that all of these terrific earning trades will have passed by the election, at least when you place the trade. I would place it. So it's lousy.
What's that?
That's lousy for me. I was really expecting great things out of this earnings season.
Yeah, I mean, personally, if you get that bounce off C2 target 3, I wouldn't be shy about doing bullish pre-runners. I wouldn't be shy at all about doing this. It seems like it's just going to kind of be choppy up until election, or at least until the market knows who's going in. So, it's hard to say, depending on what news channel you listen to, who's going to get elected. But I mean, generally incumbents get reelected, so we'll see what happens. So the Russell's right kind of near that 200-day. So target 3, 1445. So that would be below that 200-day SMA. So, if it dips below there, you got a few days for it to come back. If not, then, obviously keep a bearish bias, if it holds down below there. A lot of the time it'll, within a few days, of breaking that, come back up. So, if it holds down below there. So you have a lot of good things, as far as price points to watch, as far as, the market direction over the next, few days, next week or so. But yeah, so any other?
Yeah, my just for the group, my personal opinion, as I mentioned before, is to be very careful on bullish trades. The bullish pre-runners, as you pointed out, did really well the first quarter that you guys tried these earning trades, which was, I believe, third quarter, right? Well, second quarter earnings, third quarter reports, when the market was going up, right?
Yeah.
And I have market is down quite a bit today. I mean, it might be below the 200 by now, the Russell. So, I'm personally cautious about any bullish trades.
Yeah.
I think it's going to go sideways with so iron condors are good. The iron flies with which are only open a week or so are good. But even like your data showed your first 6 months results, and the ones that did the worst, the strategies on the daily alerts that did the worst, were the ones that were going against the tide of the market, right? Like bull put spreads did poorly in the first half because we had that massive drawdown in February, March, right?
Right.
And you can't avoid the tide of the market.
Right.
You follow what I'm saying?
Yeah.
Is that the market is if the market is generally going up, which it was last year, and it was from March through August, the more the bullish pre-runners and the bull put spreads have a higher probability of working because the market's helping them,
Right.
right?
You're not fighting the tide.
You're not fighting the tide or the ocean current.
Yeah.
Currently, the market is choppy or slightly down. In fact, recently, all of the states of all the indexes have gone to 2,
Right.
correct? The Russell went first, then the S&P, then the NASDAQ, and now yesterday the Dow switched to state 2.
Right.
So I think you want some feedback. In my personal opinion, I'm being very careful on the bullish trades because I think the tide is against them. I think they historically test well because look at where the market's gone from 2009 to 2019, right? The market's gone up for the most part, and so they generally test out well. But that doesn't mean the market's going to do that this quarter.
Right. Yeah. I mean, there's no guarantees. We've been tracking these since, what was it, Shawn, like 2018, that the last quarter in 2018 was really the only time this didn't work. And that's when they were raising rates and expanding shrinking the shred, balance sheet. And that's the market pretty much was just in a free fall. And that was the only quarter that, they didn't in general work as a group. So
yeah, that just kind of proves my point. It was what I'm saying is that, the fourth quarter of 2018 was the midterm election, and also Jerome Powell was raising rates
right.
and reducing the balance sheet, right?
Mm-hmm.
So, and then you had that drop. This time it's the presidential election, right? And the market overall does fine, whether it's a Democrat or Republican president. Historically, the market has been fine. I think what the market doesn't like is the uncertainty.
Oh, yeah.
And right now, there's a significant amount of uncertainty on how the election turns out. Both sides are saying they're going to challenge the result no matter what it is.
Yeah.
And this is not, this is not the election in Belarus, right? Belarus had an election and there's protests and accusations of corruption and all that, but who cares? Economically, Belarus is not going to affect the world. But the contested election in the United States, which is the largest economy in the world, of course,
Mm-hmm.
and the only superpower is going to affect a lot of things. So
Right.
that's why.
Well, there is we did have a contested election back with Gore and Bush, so you could probably look at that, as your only indicator on something like this, because that, had to go to the Supreme Court, all that crap. So
that's true, but the database doesn't go back that far, right? That was 2000.
yeah.
So we don't have data back that far. That was a very contested election going to the Supreme Court and all that.
Yeah. Yeah, you'd have to look at another, service for.
And I think VIX persisted for quite a while after that non-election results time period. I think it lasted almost to the beginning of the year.
What persisted? I didn't catch that.
That election, not knowing who won back with Gore and Bush, I think. Volatility lasted a lot longer than election day that year because of that very reason.
Yeah, we'd have to look back at a chart at 2000 and 2001. I don't recall.
Anyway, you're right though. I agree that this is a time to be cautious. And I think the only reason you could get bullish is if somebody did launch a stimulus package that was expected and hasn't materialized and may not materialize. I think that very reason that price was built into the market on getting another federal stimulus package from the government, not the Fed, but the government, but the Congress. And now it's being backed out. Now, is it backed out 10% of the move that's happened? Maybe if it has, it'll stabilize right here. Maybe it hasn't, though. Maybe there's more to come out.
Well, I haven't seen anything that they're close to a stimulus package. So
Right, right. But there was one that was priced in. That's my point.
yeah, good point. Yeah. Having said that, just for feedback, I counted the earnings plan, and there are 334 trades in there, and I missed the Costco one, the vol riser, but either on paper or live, I plan to take most of them. Right.
Yeah.
To do it all, unless, like, I missed Goldman Sachs because they moved the earnings, and then so the vol rise thing is too late. There's going to be a few like that, but we'll see. I think the earnings plan is fantastic. I think this quarter is going to be an unusual quarter because of the election, but hopefully we can continue to get this earnings plan quarter over quarter, and I think there's a lot of excellent trades in it.
Yeah, we'll do it. And obviously this is the first iteration of, publishing like a comprehensive plan like that. So, I think, we'll all learn a few lessons here.
I got a question. How'd you come up with 300 and some?
That's what he counted them.
I printed out, there's a PDF that Josh sent and also posted that is the plan by trade date.
Yeah.
I just printed it. It's 11 pages. I just counted it.
Is that the one with the raw data, or is that the one with the high probability?
No, it's this one. Earnings by trade date.
Yeah, earnings by trade date. I just counted each row.
Yeah, that's a lot.
Yeah. But think about it. If you, if you probably can't, because like earnings move around. Like I told you, I already missed a couple because earnings moved around.
Yeah.
But if you take 300 trades, and all of these have a win rate of 80% or higher. So if you do 80% and win 80% and lose 20%, that's a pretty good quarter.
Right.
That's make some serious money that way.
Well, yes and no, because if you're losing 100%, you got to make 4 times 25%. So you got to be careful about your money management.
True. It does depend on your profile, but the profiles vary. For example, on long or like the bearish, right, long bearish pre-runner, long put, you're supposed to get out at 25%, but your stop loss is 100%, right? So you can't lose too many bearish pre-runners. On the other hand, like the volatility rise long strangles, it's 25% profit you get out and 50% stop loss.
Right.
So
That's what on the pre-runners, I go to 50%.
You do?
Yeah, because the money management sucks at 25% gain and 100% loss.
Right.
Plus you run out of time too.
Yeah.
And
so it does depend on where you set those, whether even at 80% win rate, you end up with a nice profit.
Yes. Yes.
Yeah, and I mean, if you think about it, like the Delta, I mean, it dropped 8%. Like you didn't make 25% on that. You made a lot more, and then, I would say very rarely will you take 100% loss on a pre-runner.
I agree. Because you'll end it before, maybe maximum 70, but you're typically 50 or less.
Yeah, and I mean, if you're down like 90%, you're just going to hold it through earnings and hope and pray anyway. You know?
Yes.
But normally you're getting in 20 days before earnings, and it's supposed to be a 60-day to expiration
Yeah.
put, right? So, 20 days go by, you still have 40 days till expiration. You're supposed to get out. If you haven't hit your 25% profit target, you're supposed to get out the day before earnings, correct?
Right.
So
Right.
some of them, maybe you'll end up with 5% profit. Some of
Correct.
them you'll end up with 20% loss. Who knows where it is on the day before earnings, but if like Josh is saying, I doubt in 20 days you're going to lose 100% of your investment if you're doing a 60 days to expiration
Right.
put, right?
Yeah. And it should be a lot less than,
Should be a lot less, and and even maybe some of them are like 5-10%. They just never hit the 25% target order, but you may still have 10% in it or something,
Right.
right?
And then you get the occasional pops too. So,
Well,
you know,
Delta was a pop, right?
oh yeah.
Yeah, it was
That,
very
that,
profitable.
yeah. Yeah. So, yeah. So, I mean, yeah, and I think you're right just about, market bias. If you're bearish on the market, then, you don't want to be doing bullish trades right now. That we always kind of preach that, when we talk about, like the steps, we've been doing this for well over a year. We kind of started with like 3 steps, market direction, where we're looking at state modeling for SPX and the Russell. We go through like the studies and then the state transitions. And I think, seasonality is another one you can add into that. So it's 4 steps, and then earnings too. So it's really like 5 steps right now. But yeah, I completely agree. I mean, if you're bearish on the market, then you're looking for bearish trades, and that market bias is the first step for a reason. It's very important, and if you get that wrong, then your trades may not turn out so well. So
Right. I mean, I'm still taking the bullish pre-runners, but I'm taking them on paper though.
yeah,
I'll do a dozen and let the paper trades prove me wrong, right? If they all start hitting their targets, and I'm missing out on all this profit on the simulated version of TAS, then I may change my mind in a month. But right, I'm still taking them just on paper.
Yeah. So the other, I want to pull up QQQ. So this is kind of what I would just you have to be alert for, like when SPX gets down there too. You can see how it just jumped off target 3, state 2. I mean, it just, it happens so often that, even if you're bearish on the market, just be careful, right? Because that can happen, and it's down to, target 2 right now, or whatever, target 1 area. But, that we've just seen it so many times where that is such like strong reversal, like support, and things take off from there. So, it's a key area, just to watch, so. Okay. That was the market update. Any other questions, comments about the market or anything? No?
Thanks again.
Yeah. Shawn, did you have anything else you want to go through, or?
No, not necessarily. What I was going to mention though earlier is just on some of the other, if you'll just, your other screeners, right? So we have the screeners set up as default, whether it be the state transitions or the seasonality. Always just be thinking of, how you can use the seasonality in different ways, or the state transitions in different ways. So even though we're looking at it one way, maybe a bullish or a bearish way, there's always different ways you can construct your screener to find candidates in a different environment. So just be nimble, be constructive, and I think you guys can find some great trades, as we already spoke about. So I was going to run the back test real quick, but that's one to bring up if you guys want to take some time and try to run a back test. this QQQ that Josh has up right now. So you see that QQQ drops down, is in state 2, hits its target 3. So that leads me to say, well, hey, let me run a back test and say, how often does QQQ hit its target 3 when it's in state 2? And when it does it typically bounce back up enough for me to buy some calls and make some 25% profits on those? And if so, you know, I might have missed this little bounce here that we had the other day, but next time it happens, maybe that'll give me a good reason to maybe buy it and see if I can make a quick return on some short time frame, but long calls on the QQQ. So that, I didn't. I was getting ready to do it when you just said that, so it kind of.
Yeah, go ahead. You want to do it?
But yeah, I can do it real quick. So yeah, go ahead and share if you want.
I think it'd be pertinent.
Let me see real quick. So.
And you can do the same thing with like Russell, SPY, SPX too.
Right. So you can do that on all of them, and you can do it. Sorry, hold on. And you can have a list, basically a stock list with those particular ETFs or those particular symbols in there, and then run that stock list as a whole using that different state 2 target 3. So if I go into Signal, everybody can see my screen, I think, right?
Yep.
All right. So Signal. These I might already have set up. So let's see, Signal, state 2, let's see, state 2.
Are you going to use the 8/26 date or today's date?
Oh, no, I'm going to use today's date. Yep, thank you. I was looking back in time at something else real quick, so sorry, thank you. State 2 met today, all right. If I hit next, I'm just going to do a signal real quick I'm just going to find one that I did before for like a time stop. I'm just going to do time stop 60 days. Should be faster than that. We'll do QQQ, state 2, target 3 met. And just type in QQQ. So again, if I had a list of 5 different stocks, I could go to stock list, pull it up there, and then just input that stock list there if I wanted to do that, just to run all the ETFs to see how they reacted. QQQ, go back in time. I'm going to see, I don't know how many times this happened, but bear with me. I'm going to say run in the background. No, let's run it and see. But yeah, you can always do, you know, QQQ, SPY, SPX, whichever ones you want to kind of throw in that bunch, and then run the test as a whole and see. You know, I don't know how many occurrences there are with this one, so you can do this a couple different ways. You know, you can come in here and set up your entry exit dates a different way, and then add them into a back test. That's I don't want to say a little more advanced, but we could do that, and it would actually tell us how many entry exit dates or how many trades would we have as a list if we wanted to know that ahead of time before we run the whole back test. So kind of give us an idea of what we're looking at. I hope everybody's been using the backtest functionality. Has anybody not been using it?
I have not been using it.
Oh, why not?
I figure, you know, you got all these backtest results, 80% probability. I mean, I think those indicate, you know, how well it's doing, and going another step forward by doing a backtest seems to be a kind of an overkill or more complicated to do
Sure.
each individual one.
Yeah, I mean, that's fair. I mean, that's a fair assumption. You know, we still want you to try to use the backtest to get comfortable doing it so you can maybe optimize them. But yeah, I mean, that's fair. I mean, that's why we've done a lot of these, because before the backtest was a bit cumbersome, and we've made it, hopefully we've improved it. But yeah, I mean, that's the reason we're sending out those trades to say, here's some trades. Here's what we found that to be very, you know, the win percentage is high or probable or profitable. But always try to optimize it if you can. So do time.
I mean, how more can you optimize it based on? I mean, you're changing the dates, you're changing the delta. I mean,
right.
I'm not exactly sure what more can you do other than changing strategies.
Right. Yeah. I mean, you can adjust like Sahira was just speaking about, you know, your loss percentage. So you could adjust that loss percentage from 100 to maybe 50, or a stock that, you know, is hitting its targets 90% of the time, you could adjust your profit target from 25% to 50%, you know, so then you might know those ones that you could let run a little bit more. But I really think it's viable when you're able to go in there and say, okay, I have this list of 100 stocks, and then I can add, you know, only stocks that are above that 200-day moving average. And then when I add that, now my list is 40. So I'm able just to find, and hopefully your win rate, you know, your win rate or profit would go up after that point. If it does, then you could add that in on top of the list or this, excuse me, the screeners we've already sent out. So let me see. I'm going to change this because I don't know which one I used before. It's a long call. And then long call. I'm going to leave that the same. So we talked earlier, 60 on some of those long call positions within the screener. I have these come up as 90 or with the earnings. So I'm going to leave it at 90. I'm going to leave it the same, 30 to 60, just for ease of purposes, 25% profit, 100% stop loss. Let's hit next. And I think before on that one page, it said there was 19, so they should come pretty quickly. Contracts, I'm going to leave as 1. We spoke about that before. Hit back test. And then once this populates, and this is, I mean, this is, you know, fair to be able to optimize in a situation like this too, because I use 25% profit, 100% stop loss, so those can always be adjusted. And some come to mind, like I've done in the past, maybe not for this group, but on my own, would be like Align Technologies. I ran a test on Align, and it was 100% win rate at 25% profit, and that's okay. Well, what about 50%? I was able to get all the way to 150% profit on a long call position before I started actually losing some of my win rate. So that just tells me that if a line comes and it's on that signal of when I should buy it based on that long call strategy, I can almost take 150% profit on that option and still have a great win rate. So that's one where you would maybe want to try to optimize it, or, you know, buy multiple options, get out at 25% of some of them, and then let the others run. And if you know they go up above 100%, then you can get out and still be at a good profit. So those are some of those where optimizing it might find you some better results. So, so yeah, the results are here. Basically, run 1, we're looking at a profit factor of 2.73, 78% win rate, 14 winners, 4 losers, and then 1 trade was rejected. So we can see that, you know, based on that, we're getting above a 70% win rate, 78% win rate, if we're able to buy QQQ when it hits that state 2 target 3. So state 2 target 3, you know, you can buy a long call, and it's showing a 78% win rate minus that 1 rejected. So yeah, pretty good. I mean, that's pretty fair to say, hey, something's in state 2, but I'm actually going to buy it. So nearest expiration is beyond max days is the 1 rejected. Nearest expiration is beyond max days. So I have to look at that and see why I would have skipped a couple options expirations there.
So you could go ahead and just so you could change and say, okay, when it just enters state 1, make it a profit from there.
Say that again?
So once it enters state 1.
Oh, right. Yeah, you can always do that, you know, say, well, okay, well, now that I'm buying it in state 2, target 3, what happens if I make some adjustment and get out when it transitions into state 1? Or yeah, you can make any type of adjustments like that to see if you could pull out some more profit, or, you know, hold on to a position and keep it running if it goes into state 1, things like that. And here's that last trade just recently, like Josh showed, what, from yesterday. Well, yeah, got out on the exit date. So if you see something like this, exit date, either something happened, you know, here's days has gone by. Let's see. But this exit date happened because this is the occurrence that Josh just showed on the chart, getting into QQQ when it hit its target 3 in state 2, which was just a couple days ago. But, you know, the back tests come up to the end of the data, which is for yesterday's close. But still, it was at a 20% profit. Now, obviously, it's down today, most likely, right, because the market's down. So that what you would start losing value on this option here unless you got out, but you wouldn't have got out because it wouldn't hit that 25% profit unless it did it intraday. But either way, So you can see that last trade came through. So the reason it shows it exited was because this is the last date that we had the data for, 9/22. So I just
So
want to show that.
technically, it's still a valid trade.
Correct.
And you had
Correct.
a drop today, so it's still open.
Right. It'd still be open, yes. And it's at what, 265? So it's at 265.
260.
So it's lower than when we got into the trade. So we'd be down money depending on, So 265.13 is where it's at. 264.84 right now. So dropping. So yeah. So cool. So yeah, use the back test if you can. If you're not comfortable doing it, like I mentioned before, get in touch with me or Josh, and let's get you comfortable using it. But no, we push a lot of data out there for trades, and we've progressed a long way from when I started with Delphian and giving you guys those trades. So track them, use them. I think there's really, like Sudhir mentioned too, I think there's some really great trades in that earnings plan that can really make some great money in any type of market environment. So I'm using it, and I know a lot of other people are using it as well. So if you need help, let me know.
One question I have, we were talking about the sentiment being more bearish. So what would be some bearish trades to do at this point? Can we just change those pre-runners to a bearish runner? A bearish pre-runner?
Well, I mean, we have the bearish pre-runners in there, right? And I think those are some, typically over the past, we've had this big run up in the market. So it's really hard to look at some of those bearish pre-runners when the market just keeps going up. But I feel like in this environment now, if you are somewhat bearish, adding some more of those bearish pre-runners to your portfolio might not be a bad way to kind of give a hedge, for the lack of a better word, right? I mean, you're adding some puts in the account. If the market does reverse a bit, those puts should gain some value and kind of, help the portfolio a little bit overall, right? I mean, if you're all bullish positions, I mean, the portfolio is probably going to drop in value, but I think having some puts in there kind of helps you hedge the account a little bit.
What if you look at putting a put on like a XLK or XLY if most of your stocks are maybe a particular sector like technology or finance, and just putting a put on that particular sector?
Yeah, I mean, that's a good way to hedge it, right? I would have to try to construct some type of back test, and the reason I say that is because since I have access to the platform, and before I just add a position like that now, I try to see if there's a way that I can run some analysis within the platform and see if I can put some numbers behind what I think might work, So yeah, I mean, I think finding a way to hedge using some of those ETFs isn't a bad way to protect some of your positions in your portfolio, but you want to make sure you're able to run the analysis to say, okay, well, if I do 4 of these, what happens? Or if I do 24 of these, what happens? And how does that kind of affect my numbers within my portfolio? Having that type of data, I think, can help you make the appropriate decision, right? And that's similar to using just the whole money management technique. I feel is, if you're not using this similar amount of risk for each position, your returns aren't going to be appropriate. And I think, if you're not using the right number of puts in a certain ETF as a hedge, it might not just perform the way. So in theory, you could have had the right idea, but you just might have executed it not the correct way. So it doesn't offer you as good of protection. So we could get together and try to run some analysis to see.
Yeah, because there's a lot of stocks that are in a particular sector, and I mean, if they're good for 60 days or whatever for that period of time, why not just put for a particular, XLK or whatever against it for one contract, just to maybe offset any losses that may occur.
Right. Yeah, and I think that's a viable strategy to put in place. We just would need to be able to try to figure out how many contracts how many puts should we buy to give you some type of an appropriate hedge. You don't have to hedge it up 100%, but just to give you, you don't want to buy one put and then your portfolio lose 5,000 in value from the long positions and then only make up 500 on the put option or whatever, right? You want to make sure you try to keep it proportionate, or at least understand if this happens, then this is about where the put should be protecting me. So you kind of get an idea of, if I lose 5% on my longs, I plan to maybe make 1% on the put or something like that. Does that make sense what I'm saying?
Right. I mean, some of the expensive ones like maybe Tesla or Amazon or whatever, hedging that rather than just doing a long call.
Right. And I totally agree on, especially on some stocks like Tesla, right? Because those put options on that company are so expensive that if you can find an appropriate hedge, and I think you should be able to kind of help mitigate some of those losses if that stock price comes down.
Yeah, Dan here. One of the problems if you want to try to do put hedges is you really have to look at the volatility because those puts can get pretty expensive, as that volatility creeps up. And you'd want to try to figure out beforehand, how much you want to protect your portfolio. If you want to just look at for crash protection, you might want to buy way out of the money, or if you're trying to beta weight it against a particular another entity, and that would determine what your strategy is going forward.
Right, and that's fair too. And I think somebody from the group had sent me an email a while back regarding a pretty similar issue where they were buying some really far out of the money puts for protection. So the puts were really inexpensive. I mean, a couple of dollars to, really cheap to buy the puts in the whole relationship to the actual portfolio. And that would be just that, if the market falls 15% or 20%, here's some puts that would offer me some protection for a really inexpensive amount of money. And I could keep doing this, every 4 weeks if I had to, until maybe I saw some different scenarios up in the market as a whole.
Yeah.
But like you say, you have to I feel like you can't just say, okay, well, let me buy these puts. Like you really have to take into account, okay, if the NASDAQ drops 20% and I'm buying these far out of the money puts for protection, how much value should these puts gain? And then how is that going to work in relationship to my account? And those are really some mathematical formulas that you kind of have to put into play on your own portfolio to figure that out, because you might buy those far out of the money puts for $500 for protection. And if the market only falls 15%, if those puts don't move in value, the hedge really hasn't done your account a service. So you really have to kind of figure those out ahead of time. And that's just kind of goes to what we've talked about before, have that plan in place and figure out, okay, what happens and what's going to transpire if this or that happens, and then know, you can't know for 100%, but you can kind of get a good idea, so you're not totally shocked if something goes awry.
Isn't that where that iHedge comes into place with the fence?
Yeah, I think so, right? I haven't used it enough to give you a good expert analysis on it. Josh maybe has, but no, I think that iHedge is a great tool to be able to put in there and use to be able to hedge some of those positions and tell you, this ETF, you would want to buy 5 of these puts per one position, this particular stock. So.
Yeah. Well, I mean, the key with hedging is timing, like you have good triggers for when you want to hedge, that's
right.
the key, because if you're paying pretty good money for a hedge each quarter, it's going to eat you alive,
Right.
So you figure out a way to be tactical about when you actually have to apply those hedges, So, and we're working on that.
Right. Yeah, but I don't mind. Yeah, I mean, if I can help you do some of those and figure that out, I don't mind doing that. It's I like doing that, trying to run the numbers, and I feel just using the platform to kind of give me some numbers to look at helps me just myself have more confidence in my trading. Trades are always going to go wrong, and I lose money on some of these trades. There's no doubt about it. But if I can say, okay, 80% of the time this works, or the majority of the time this works or this doesn't, then I feel like it just gives me the confidence to put those trades on there, and I'm not just kind of shooting at the hip.
You're a gunslinger, Shawn.
I do still do that sometimes, but I sleep a little better not doing it, I guess.
Oh yeah, that'll keep you up. Okay, yeah. Does anyone have questions? Anything else? We appreciate the feedback. If you guys have topics that you would like covered during these meetings, we also would appreciate that. Otherwise you're force-fed what me and Shawn come up with. So if you guys have specific...
I got a topic.
Okay.
how do we trade with the big guns, you know, like the big industries, and when they get in, how is there a place to look for that? So, you know, we're a small marble, but they're the truck. Once they move, everything else moves with it. So is there somewhere out there that besides you see inside traders in that overall profile, but you know, as far as searching or knowing when something occurs?
Yeah. Well, I mean, a lot of it is like, you know, for the options market, you can see unusual activity. The problem with like the big institutional is they don't have to release their trades until, you know, the end of the quarter. So then, you know, it's already passed, and, you know, they may continue to accumulate. But I mean, I think the bullish pre-runners is kind of where you can see, you know, we found one area where, you know, they're buying into the earnings for, you know, like these kind of bullish, you know, kind of hotter stocks. You know, they're loading up going into it. But, you know, we're working on an option screener for unusual activity, you know, that Shawn's kind of heading that to find, you know, specific strikes and expirations that have really unusual, you know, options activity. So that would be a good indicator, I think, in the system. I don't think it's, you know, it's not built yet, but that's something we're working on. I don't know, Shawn, you have ideas?
I don't. I mean, that's just similar to what you're saying. Usually they have time to actually report it, you know. The first thing that had come to my mind was like, I know a lot of people when we went to New York were talking about, you know, consolidation, like in a candlestick in a chart, you know, so we'd have to look at some of the candlesticks that we have available within the system to see if you can see like price consolidation, or like, you know, you see a price area where more people are coming in to buy the stock, or a price area where more people are coming in to sell it. You know, similar to anything in the market, not necessarily stocks, but anything really where people are going to buy at a price point and then they just don't want to buy it because it's too expensive. So yeah, we can look at some more stuff like that, and maybe try to talk about that next meeting.
We've discussed the options idea. I'm kind of looking forward to that. I think there's some indication there of trading with the big guys, as we've discussed, Shawn, you and I have.
Yes.
You know, right now your options analysis screen, it shows the stocks where there is a big increase in open interest, but it doesn't tell you which expiration and strike had that big open interest increase, right? And you know, there's two schools of thought. This is for the group. This is what Shawn and I discussed, and what I believe you said you're working on is, you know, if you listen to the Pete Najarians and the John Najarian on CNBC, they're always listing unusual activity on the halftime report. And their theory, at least what they say on TV, is that if the big guys are getting in at a particular strike, then they're going to join them. They're going to, they know something we don't know, right?
Right.
Now, there's another theory out there that the other side of the trade, the market maker who took most of that trade, you know, when you have a really large options position, there may not be another retail trader who took the other side of that trade. It might be the market maker. And so they have an incentive to drive the price away from that strike to force that option series to expire worthless. So that large open interests in calls act like resistance, and large open interest in puts act like support. And it would be interesting if we can identify where the, you know, the actual strikes that the report is referring to, that to test that. Does following the open interest, getting in that trade work, or is it better to For example, if you see a big increase in open interest in calls, well, maybe you want to sell a bear call spread, assuming that the price will never get past that strike. You follow what I'm saying?
Yes, I do.
So that's something I'd like to test, and that is I don't know the name of the gentleman who was speaking earlier, but that is something related to the big guys. I mean, large amounts of open interest can only be done by these very large players.
Right, and that's I mean that's what we're working on. I'm trying to work with Ashok in the group and Josh to see if we can get a screener in there to where we can pull that out. And I have some examples from the other day. So in Thinkorswim currently you have a trade flash screen that you can use, which kind of just puts across a flash of different trades that maybe are coming out that might move that particular stock. And Tesla is one that's been showing up a lot. And so like I mentioned to Josh earlier today, I get one where it says, you know, somebody bought 2,500 Tesla November 20 $400 puts at a certain, and it gives me the price. So, you know,
do you know if if they bought them or sold them? I mean, is that
what tells you buy or sell? Yeah.
okay?
But so like this one just came across. Let's see, so I can show you. I don't know. Let me see. I don't know how great it is. I'm still trying to figure it out, right? But you can see down here in the bottom, I don't know where I figured that, but this trade flash down here. So you can see big delta buy 2,500 Tesla November 20, 400 puts at 69 bucks, sold those. But you can see there's a buy here for the 400 calls, and then there's a sell directly after it, right? So you don't really know what happened there, you know, because it's the same option. But either which way, one came across yesterday or the other day, and it was like 9,000 of these options came through for January expiration, and they were like $600 puts. So, you know, I'm trying to take that value and say, okay, well, I see the options that move, but I want to have a screener in Delphian that can say, hey, you know, yesterday this option didn't have any open interest or volume. Today, all of a sudden, now there's 9,000 of these options that were traded. And I want the system to try to pick that out and show me and say, okay, here it is, you know, now what are you going to do with it kind of thing. So that's what we're working on, and to see if we can see that. Because it'll tell you, hey, Tesla's open interest or Tesla's volume increased, you know, yesterday. Okay, well, great. Well, which options were traded, which expiration, and more specifically, if you can tell me which strike, that's even better. So that's what we're trying to set up.
Yeah, right now this gives you cumulative.
Right.
Data.
Right.
It's not good enough.
Yeah, and that's something you're asking for other things. That's something of big interest to me is, you know, what is the right way to play these? First, where is the big open interest increase exactly? And then what is the highest probability way to play that?
Right. Yeah, I think like you say, if you can figure out which side of the market those trades are going on, then constructing a bull put spread or constructing a, you know, bull call spread or something like that is pretty key in my mind too. And I think I mentioned this to you, Sid, here last time. This is for the group. Is a lot of times, you know, I see a big consolidation on maybe an option that I'm trading, and I'm like, you know, why is Tesla staying around 400? Tesla never only moves, you know, $2 or so for the past 2 days. And then sure enough, you know, that Friday is monthly option expiration, and, you know, big open interest is that particular strike, and the stock closes at like $3.99. And you're like, that just doesn't, and then on Monday it's at $4.50. And you're like, that just doesn't make sense of why you have that big consolidation, those options expire, and then it just blasts through it by 10% the next day. It doesn't seem like it's a coincidence. Seems
I've observed the same thing, but, you know, I haven't observed it enough to say that, you know, it's not, that's an anecdote, right? When you observe something, but you don't have any actual stats on how often that'll work, right? But I've observed exactly the same thing. You see a large amount of open interest, and the stock will just stop right there.
That's right.
We have to ask Mark. He's not on it anymore, but next week.
Yeah, I was going to say, is he on? Because I was going to say he probably knows. So, but yeah, this is part of the screen here. I mean, this is the options activity. So we have a couple screeners in here already, and it does show you some of these movements between, you know, your average move for 20 days versus the current open interest. But again, this is the open interest for the entire set of Apache or Mattel, not, you know, obviously the put side, but all of the puts. So all of the different expirations. So I want to be able to kind of go down a little bit, you know, more in the weeds on this one and just say, okay, well, which expiration has the most, you know, because maybe one expiration has 80% of this open interest and the other 20% spread out through all the other options. So I think that's going to be a pretty key factor if we can get it. But, you know, I'm working on it. So here for Ashok to kind of put it into place to kind of speak our case and speak the reason why we should have it. I used Tesla, that 9,000 option, as my my test subject yesterday, but 9,000 options on Tesla, that volume didn't really move the entire amount of volume of Tesla options for the day. So I think I've chose a bad sample. So I got to do a different sample today and send it to them tomorrow. I was like, oh, 9,000 options, that's going to be huge. And it didn't, percentage-wise, it wasn't a big percentage mover on the basis of the volume of options traded for Tesla. So
For the cumulative, it doesn't really.
yeah, unfortunately, I used a bad example.
So it's hidden. So we're using the wrong screener, you know, to find these things. Like you can't see that through, you know, that's like a needle in a haystack, you know. We
Right.
need the computer to, you know, figure out, okay, here's 9,000 at this, you know, and the day before there was 10, you know.
Right. So exactly right.
Yeah, so we'll work on that. And I guess we got to close up here. It's 4 o'clock, you know, 3 hours. You guys.
One last thing, Shawn, I just realized you sent me a text. Yeah, feel free to talk about, I don't know if we still have time if you want to, but you wanted to talk about a Walmart example or something?
Yeah. We can speak about that next week, but that kind of goes to the vagueness of me talking about that seasonality screener. So Sudhir mentioned something last week, basically using seasonality. So you use seasonality to see if a stock moves a certain percentage over a certain amount of time. And if it does, then you typically will want to buy calls. But, you know, Sudhir mentioned, hey, what about doing the reverse? What about stocks that typically do not move in this time? So try to find stocks that don't move. And then if that's the case, then maybe you can collect credit or sell a strangle, sell a straddle, do an iron fly or something like that on that type of trade. And his example a couple of weeks ago was Walmart. So it's perfect, right? Walmart typically wouldn't move in this time frame because, you know, Black Friday is still 60 days away or so. So it's typically probably not going to move in an example like this. And I think that's just a great example of how you would want to maybe take a screener like seasonality and think about it in a different way. Okay, what about a stock that doesn't move? And then try to find trades based on that. So we can go a little more detail on it next week.
Yeah, it's a good teaser for next week.
Yeah.
So,
But yeah, anytime we come up with ideas like that, so anytime somebody speaks to me about a trade idea, you know, whether it be Josh, Sudhir, Ashok, whatever, I just always want to verify with that person that that I can talk about it before I talk about it, because I just want to make sure you're good with it. And that's why I texted Sudhir, was just to make sure it was okay to discuss that before I actually did speak about it. So
yeah, I appreciate that.
So thanks.
all right, guys, we're going to close it up for this week. Thank you all for attending. The video will be out probably tomorrow morning.
All right, thank you.
Thanks,
Thanks,
guys.
good meeting.
Thank you. Very good meeting.